And the bears are really trying hard to, cross that 25,000 level, but the bears are pulling them back. And that's exactly what has happened today. For a short period of time, we did cross that 25,000 mark, again came back below that mark, and again are around 6 points above that 25,000 mark. And a very range-bound trade of around 35 odd points. With regards to Bank Nifty, doing a tad bit better than where the Nifty 50 stands, up by about 0.3%. But let's try to pull up the Nifty 50 heat map and see how particular stocks are doing. And there's Shriram Finance that's leading the pack, up 2.5%. NTPC, Adani Enterprises up 1.8%. NTPC up also 1.8%. Axis Bank, Power Grid, Sun Pharma, some counters that are doing well and up by about 1%. But something that's under pressure. IT is seeing profit booking today. Infosys down by about 1.3%. Bajaj Auto, some auto names also seeing pressure, down by about 1.5%. Wipro, another IT name that's under pressure. SBI Life, Eicher Motors, Titan. Consumption names continue to be under pressure. The Nifty FMCG also not doing very well. And some counters like Hero MotoCorp and Ultratech and Tech Mahindra down by about 0.7 to 0.6%. Let's try to pull up the sectoral heat map that will give us a picture as to how sectors are fed during the day. And there you go. There's Nifty Oil and Gas leading the pack, up 1%, followed by Nifty Media, Nifty Energy, PSU Bank. Probably the reason as to why we're seeing the rally in the Nifty Bank. And this is probably second or third day in a row. I think Harsh will give us a better picture. Second day in a row for PSU banks that's seeing gains, and that's probably one of the reasons as to why Nifty Bank is doing better than the Nifty 50. But Nifty IT certainly seeing profit booking, down by about 0.7%. Nifty Auto also down by 0.2%. Nifty Realty also in the red, and Nifty Defense also a tad bit in the red. But let's try to pull up the advanced decline ratio, because that will give us a picture as to how broader markets are doing, and they are a tad bit under pressure.
They seem to be, but it's a very similar texture, Mahima, to the Nifty 50 index. They're very, very range bound. So Nifty 50 trading in an 80-point range, which is extremely tight, and so are some of the broader market indices. So the Nifty mid cap as well as small cap, the Nifty mid cap within that 100-point band, so fairly tight. The Nifty small cap just about in a 100-point band. So but the one thing that's played out is, after all of this choppiness, we're sitting at the day's low, and that might be a bit of a concern. You want to wait and watch as to how that plays out. And because of that kind of a chart pattern that we've seen, the advanced decline is reflecting what it is. In terms of the BSE 500, there are some buzzers. Aurobindo Pharma being one, 5% up, mind you. What a solid move today. And we'll have Varsha come in and give us some intelligence on Aurobindo Pharma. So you want to wait and watch for that. But then you have GSPL and Gujarat Ambuja Exports. And we've seen sharp moves on both of these. Let's pull it up intraday and you'll see what I'm talking about. Also, there's the other one is Angel One that I want to talk about. It's really fallen from the day's high. There you go. You see that move. That's a very sharp move that we've seen on Angel One, 5% lower. But the other two, GSPL and Gujarat Ambuja, those will show a slightly different pattern, the exact reverse. We're seeing very good strength, nearly 4% up, and at the very top, it was far higher, and very similar chart structure for GSPL as well. Picked up at the start of the day, and it's sustained all across. One more stock I want to mark out is a BSE, and this is again capital markets. Angel One has done that, and look at the BSE stock price. It's down 5% more today. Stock under pressure, and from the highs of the day, it's really fallen. One last piece, the Nifty PSU banking constituents, because yesterday this index was up 2%. There was very strong short covering. We have Kush Bora with us, and I'm going to quiz him on exactly this. But look at the moves, and therefore, this is one index which seems to be outperforming on an otherwise subdued day. Kush Bora, let me take you first to the PSU banking index today, because your call yesterday was short covering at play. Is this something that's changing here, and could you expect some uptick here? Before I take the Nifty 50 and the Nifty Bank, the Nifty PSU Bank first.
Sure. Hi, Harsh. A very good afternoon to you and to all the viewers. I think this is still a continuation of the short covering move that we spoke of yesterday. If I speak of Nifty Bank in particular, where the data is more clearly available and highly traded, you did see a very clear short covering with a drop of nearly 4% in the open interest yesterday. I think this is a continuation of that move. Even if that is the case, I think it's a healthy sign, which means the shorting that the FIIs were doing has at least temporarily come to a halt. And not only the PSU bank, even the private ones, will be a beneficiary of it. PSUs more so because you had seen a much deeper gash in some of these names. So I will definitely look out for something like an SBI, a PNB, even an Indian bank for that matter, for a long trade. But I want this to be a more sustainable trend. At the moment, if I were to pick, it's only SBI, from the large cap ones, and Indian bank, from the relatively smaller names that do stand out for me, from this bank.
Okay, and Kush, the Nifty and the Bank Nifty, what's the call coming in there? It's such a flat market and it's also such a range-bound market.
Greedy, Harsh. This is the seventh day. If we close in the green, then this is the seventh day when the Nifty.
But such marginal gains, Kush, and you would well know that the kind of range in which we are trading, it's been so tight, right? So when do we see a breakout? Not as much greedy as I am to understand where does this go from here and when.
Oh no, but greed is good in markets. Greed is good. So I mean, not too far back. We were at 24,400, 24,450, right? So I think this is a good move. I will take this move, any day of the week. That said, I think this is 25,000, like we spoke about, yesterday on the closing show. What I am happy about is that the call and the put bases have shifted, and 25,000 indeed, as the data was showing yesterday, also confirming today that that is now the pivotal level. Also, from a technical standpoint, this is a bit of a resistance mark. So any close above this could actually could accelerate that short covering rally that we've been speaking about. So yes, I will definitely wait for this closing above the 25,000 mark. 7 days on the trot, if we considering we close in the green today, then perhaps 1 or 2 days of mild consolidation, mild profit booking par for the course. But this is a good move. Closing above 25,000 should actually take the Nifty higher. What is actually more heartening is the Bank Nifty. Second day out of outperformance, and like I did yesterday, I would perhaps bet $1 or $2 on this move. That today also you might see some sort of a positive number from the FIIs on the index futures. Mind them being very clear on that one. So yes, this is a good indication. This is a good sign. The tide seems to be turning. Will I go out and buy today either Nifty or the Bank Nifty? Not yet, because both of them are very close to the resistance mark. But a closing above these critical resistance levels and the tide turns positive, and you can go positionally long.
Okay, so Nifty Bank over the Nifty 50 index, and Kush, your picks therefore for this afternoon.
Sure. Again, with that enthusiasm, I'm going with 2 longs. The first one is Barrack Engineering. We did discuss this exactly 2 sessions ago for targets of 620 and 635 with a stop loss around the 590 mark. Today, during the day, that first target was hit. It's seeing some mild profit booking from there on back of very low volumes, and that's okay. 620, 635, same target still intact, 590 your stop loss. So it's more of a reinitiation or a reconfirmation of that call. The second one is a more interesting one, Diffusion Engineers. This was on my radar for some time, for about a week or so. Could not generate a call because it just shot up, quite fast. Now, if you see, the stock is again seeing positive traction on the volume front as well. Price action also quite healthy. Slightly off the day's highs, but with the kind of volume accumulation on this one, this is a good stock to at least initiate a near term or near to a medium term trade. So 410, 422 your targets. 386 is where you keep that stop loss. You could factor for volatility, but on the whole, very enthusiastic by the price and the volume action in this one.
Fascinating. You're also bullish on the Nifty Bank. So any names there that I can tempt you to give out?
SBI, as I said, one of them definitely.
Okay.
And the reason I go with SBI, Harsh, is because with the kind of volatility that you've seen in the markets, you want to be with slightly safer names. So definitely SBI, and in the cash segment, you want to bet on something like Indian Bank, which has done rather well considering everything that's happened around.
Okay. Okay, so it's time for our stock of the day segment today, and the counter that we've chosen is Ixigo. Now, it's an interesting space, and the stock has seen a good amount of movement today. While there's no fundamental trigger per se, it's good to understand as to what's happened with the stock so far. Let's take a look at what's been working in terms of where Q1 stands. Overall, there has been a strong revenue growth, and this is on the back of transaction activity. There you go. That's the kind of uptick that we've seen in the stock. Plus, gross transaction value for the company has expanded by 55%. Net profit has also seen a growth of 28.5% on the back of a strong top line growth. Even in terms of market share. Now, this is an interesting one because they've gained market share in the flight segment in Q1. And this is despite of the kind of headwinds we've seen in the quarter, considering Operation Sindoor, the Iran-Israel conflict, etc. Now, in terms of what's not worked, the margin picture. The only concern was that margin contracted by 110 basis points. But this is largely because they've made investments in the quarter, and that's led to the dip in contribution margin. Let's take a quick look as to how the numbers also panned out in Q1. In terms of revenue, up 73%, EBITDA up 52%, margins at 8.1 versus that of 9.2, and net profit up 28.5%. In terms of segmental wise breakup, well, flights and buses segment gross transaction value grew 81% each. Flight segment, robust passenger segment growth. This is despite of the headwinds that I talked about. Train gross transaction value was up 30%. Train segment continues to consolidate, but is a dominant part of their overall share in terms of revenue. Bus passenger also saw a good growth of around 73.7%. Lastly, in terms of the con call takeaway, they've talked about travel guarantee that's driving significant user engagement. Management plans to continue to invest in technology, AI, new initiatives, and company has guided for slightly more than 300 million INR of ESOP in FY26 as well. Now, today, in fact, we had the co-founders, that is Alok Bajpai and Rajneesh Kumar, in the studio and gave us an exclusive conversation and talked about this travel guarantee feature, which is an interesting one on their app. Listening to what they had to say.
Travel guarantee, it solves a real problem for the customer because, if the intention was to actually travel on that date and just because you had a waitlisted ticket, even with a high probability of confirmation, you would want more assurance that you will get to travel, right? So there is definitely a need that it solves out there, and therefore many people are appreciating it. In terms of the economics, look, think of it as the following, right? So out of all the people who buy a travel guarantee, some the train ticket itself will confirm, which is great, they're happy. For others, where it doesn't, 1x goes back as the refund and 2x more into their Ixigo Money Wallet, where they can use that 3x to book a flight or a bus or a Tatkal train ticket instead. Right. And by virtue of doing that, they are guaranteed to travel. That's what the guarantee is all about. And I think in that sense, the cohort pays for itself, right? So I don't think, when you say there's no real cash burn involved in that sense, right? But the excitement is that it opens up a cohort of people who would have otherwise not booked. Imagine that you saw a waitlisted ticket, even with 90% chance of confirmation, you might not even book it. But with travel guarantee, you're likely to book it because you know that you will get to travel, right? So I think it does sort of expand the market in that sense. We've had a track record of launching these innovations primarily because we spend a lot of time understanding the customer pain areas, and we obviously will continue evaluating more such products, not just for train but also for bus and flights. In every year we've historically launched at least one or two of such products. So yeah, we'll keep evaluating that.
All right, so that was the management of Ixigo talking about the travel guarantee feature, and it's an interesting conversation as well. We'll get you the entire conversation soon. But Kush, I'll come to you on this one. My director was prompting me right now, saying that the stock has grown by almost 150% in the last 6 months is what I'm seeing. Your view on the charts, and do you think the momentum still continues?
Yeah, I had a slightly narrow time frame, 80% in the last 39 sessions. So yeah, the returns have been staggering. I think you have to now hold your horses in the sense that any fresh entries will not be warranted because the risk reward ratio is just not favorable. If you look at it, at the daily time frame or the weekly time frame, definitely close to overhit territories. Any kind of dips should be taken as an opportunity. So in case you get the stock, let's say around the 280-85 zone, that should be taken as an opportunity to enter a fresh. But if you have a position, continue to hold. Fresh entries on declines makes more sense.
So that's the take coming in on an Ixigo, but I have with me Manav Chopra. He was with us last, Manav, on the 6th of March, if I recall right. And since that point, let me give him credit. The Nifty metal is up nearly 20%. Your call was 30% this year. So it's already done. It's 2/3 of the way through.
Right.
And Tata Steel was your top call, if I recall right. And that is up 21%
Right.
since that point.
Right.
So we've seen very, very strong gains on both of those.
Right.
Let me start with that. Take a cue from
Can I
that.
beg to differ?
Please.
Can I start with what is the puzzling question for everybody in the markets right now? ये market भाग क्यों नहीं रहा है? So, right, let's start with
I
that.
think we should take
Yeah, yeah. So
I think makes a lot of sense.
He's got a veto, of course. So
Okay, no, because that's a question in my mind. So I thought,
Yeah,
let's do that
please,
first.
please.
So let us understand the context of the market, right? So what happened in March was one of the panic lows that markets created, and from there we've seen a good rally. Usually, if we go back in time, we also witnessed a similar process where after a very strong rally, there was a correction of 15% on the index, a strong rally, and what witnessed was a time-bound correction. What we are witnessing now, we had a similar formation in 2015-16 also. If you ask me, this is a very healthy pause in a larger uptrend. I would call this as a reset phase when you look things on a little broader perspective. I am of no camping that the markets are going lower or it tests the previous lows. I think that is elephant in the room that everybody should be clear. We are not testing the March lows, to make it very clear. What happens is we are going to form a higher bottom across the sectors. Let it be the indices, which I think my sense is we've already done it or we are at the end stage of doing it. In that process, to answer your part, when this time and pause correction comes to an end, there are definitely what the catalyst can be some news events that can follow, but importantly, it's all positioning at the end of the day, right? There are excessive shorts in the system by the FIs.
Yeah,
Okay,
93 to 92 to 8 or something like that.
yeah, there is reasonable short. So if you ask me on the net index positions, it has also breached your April lows. On the index futures, it's at 1,75,000 contract shorts. Not necessary, that is one of the elevated levels to look at, but with excessive shorts, but what triggers that short squeeze or the end of this correction phase is going to be your breadths. Your large caps has to take that trigger on the upside. And in the past instances, whenever this squeeze has to play out or that momentum flavor that we want all in the market to come in is, almost that stage is coming to that part. So right now the Nifty 50 breadth indicator, which is greater than 200-day average, despite of this correction is still at elevated levels of 60%. Right now, as on today date, it's at 66%. In the past, the triggers have actually played out. So we have extreme shorts and Nifty breadth greater than 200-day average is at above 60%. The probability of short squeeze is reasonably high at the current scenario. This number from 50 has come to 66%. So my guess is with the elements which are currently playing into the markets and the broader markets is also kind to stabilize. We've seen some bit of positive trigger. I think it's a matter of time when this starts triggering on the upside. So
is this matter of time in weeks or months or?
If I knew the answer,
He's alluding to the fact that he might not have been sitting here.
yeah, you can say that. But I mean, on a very constructive basis, I think what happens after that, I think that is the most exciting part.
Sure, yeah.
The Nifty usually rallies 5% without any correction of even 1%. So a non-stop rally of 5 to 7%, that could happen in a matter of 2 weeks. So I think that is the perspective to look at. So should we actually wait for the breakout? We've already started initiating some long positions after taking a breather for last few months. We've reiterated on metals and other sectors, but my base understanding is that in this end stage, difficult to time what the scenario is, but there will be certain sectors and stocks which will actually start its up move. And that's where one needs to be positioned, and market gives the trigger, so you're already ahead is what we are basing for.
Interesting.
So what are those stocks?
In this bull camp.
So what are those stocks?
What are those?
So our first preference is on metals. I think we have already reinitiated on the metals just a couple of weeks back. If we go to see, important criteria for us to select any sectors or the heavyweight sectors or high beta sectors would be the sectors which are in an uptrend which have also outperformed in the correction. So, those are some leading indicators. So, metals is one of the sectors we have as one of our top picks, and we remain on that. Still hold with the perspective metals would be testing its all-time highs. There is an additional tailwind that we have from the global markets, mainly the Chinese markets. It has seen a 10-year breakout. Obviously, a lot of technological stocks in the Chinese are taking that, kind of a momentum. But yes, the metal stocks within the Chinese sectors are also doing reasonably well. The iron ore prices have started to move up along with the metal prices. Any uptick in the aluminum, these would be enough tailwinds for us to even come closer to all-time highs. So that has always been my base case. So for metals testing to all-time highs is just the base case for us. Eventually, once the trigger comes in, the momentum rally really sees a lot of momentum ahead. So for us, metals is definitely one of our top bets.
Mahima?
I think IT is another interesting one.
Yes.
We saw 2 days of straight gain where we saw almost 5% rally in IT. Today there's some profit booking. Any view with regards to this sector? And if you were to play this sector technically, what would your picks be?
Right. So for us now, IT has come to a point where it is no more a space where you have to step back. It is a scenario where you have to eventually start looking for an accumulation, at least for a medium term, long term perspective. This is one of the sectors which is at its long term support. 35,000 on the IT index is a very, very strong support. Currently we are at roughly at 35,000, which is barely anything. So we have seen certain mid caps which are still doing far better, but I think within that space, large cap IT has a very strong risk reward. Names like Infi, Techem. If you also go and see the positioning by the domestic mutual funds, majority are underweight. Okay, so you have an underweight sequence already in the IT as a sector. The FIs have been selling IT throughout the 2025. The Nifty versus IT ratios are also had historical support. So for us, IT is at such an inflection point where a 10% move in an IT as a sector like this, I will not be surprised. So that is an additional tailwind that we are looking within the heavyweights to play. As for us, within IT, Infi and Techem remains one of our top bets.
What makes you positive on IT? It's just the oversold nature of it, or what is likely, what's the thesis like?
Yes, absolutely. One of the oversold natures, and not only oversold, but it has come to its long-term support lines, right?
Sure.
And with that formation, we have seen enough selling and selling exhaustion as one of the patterns also playing out. So usually, demand and supply is one of the important aspect we cannot really ignore. But when we know that it has come to an end stage where there are certain accumulations already been witnessed, and any positive trigger that comes in, looking at the broader scenarios and how the market construct is playing. So it doesn't take, any heavyweight sector, especially on the mutual fund side, if they are underweight, in terms of positioning, it hurts their performance to a larger extent. That's where they would want to upsize. So there is a reasonable amount of gain that could eventually play out on the positioning size. But for us, it has come to a risk-reward ratio where IT, at least on the large cap front, should be bought with a strong accumulation, is what we are suggesting.
All right. One of a bunch of buckets wherein there is news flow.
Yeah.
Consumption, clearly the focus of GST plus income tax cuts.
Right.
Anything in that bucket, it could be the AC makers, it could be two-wheeler companies, it could be passenger vehicles like M&M, etc.
Right.
Anything in that?
So particularly from the auto as a space, I particularly like auto as a space. Mainly because the names like Endurance, your Uno Minda, Minda Corp, these are going to be your early movers. When the auto index, not before it started even witnessing a breakout, these were already closer to its all-time high. So there are some strong tailwinds within this space. And within the consumption bucket, it is the hotels that I like, particularly Lemon Tree. So, there are certain pockets of mid-caps, irrespective of where the market is, but they are already in a strong bull grip. So, we suggest that to stay along with these names, sectors, largely going forward. And obviously, with the tailwind of GST, I think the frontline names, but my focus would be getting into the broader markets or the mid-caps, because eventually that's where the momentum would eventually be coming into the markets again.
So Lemon Tree has GST benefits too. I was trying to understand if for example, the AC manufacturers.
Right.
Do they come into the play? Voltas, Blue Star, etc., etc., etc.
So I have seen the broader setups of this space, but only Amber is one of the stocks which is standing out. But other names are more, more of a neutral to a broader trend, which has no clarity for any strong upside at the moment.
Okay, and anything in the staple space then? Your HUL, Britannia, Nestle, anything of that sort?
For me, FMCG largely is going to be a trading sector. I'm not of a opinion that this would be a buy and hold, or we see FMCG coming back all the way to its previous 2024 highs. It's going to be more of a stock specific. So for us, I'm only focusing on those key sectors where we do see constructive upside within the bullish uptrend, and that's our initial thoughts with.
You also suggested a rotational play. You suggested metals is the big bet. Any other ones which are looking like low-hanging fruit? You spoke about IT, you spoke about metals.
Right.
Any other sectors? I'm tilting towards financials because it's been a while since we've seen the Nifty bank underperform, and it's a little tough for me to see that. So, so just joking, but give us your perspective.
Right. So within the BFSI space, I think one of the most interesting themes which is coming up, and I'm already very bullish in that, is the PSU banks. Okay, what we've noticed in the recent correction is that the PSU banks have actually outperformed the private banks, and the kind of the structure that the PSU banks have formed is similar to what we witnessed in the metal index. Obviously, there are different perspectives, but majority of the PSU banks, let it be your Can Bank, PNB, Bob, they are kind of witnessing early stage of bottoming formation. And the construct is turning very positive because the ratio chart of the PSU banks versus the private banks have already breached its previous month highs. So my base case is any stability in the financials, mainly the BFSI space, we will be seeing a reasonable upswing coming into the PSU banks. Also, another part is the Indian 10-year yields, has seen a rally from its 6.1 levels all the way to 6.6. It's kind of halting over there. So, we expect some bit of a that short-term risk of kind of a stage coming to an end, and any momentum or the short squeeze that comes in, usually the metals, the PSUs and the public sector theme is likely to come back into the flavor.
Quick 30 seconds. Gold, silver?
I think they have really rallied a lot, if you really ask me. Yes, I do expect a pause, at least in gold, but not the silver. In fact, silver as a part, when we are looking at the dollar index, I don't see dollar index going or testing even 100. So as long as dollar index is below 98, which is the larger case, but the last leg of the silver can be very sharp. So a retest of its all-time highs of closer to $40 cannot be ruled out. We are at 42, which still has like a 20-25%. But if you ask me gold versus silver, definitely choose a silver over.
Viewers, keep this in mind. Sometime last year, it almost seemed that what is happening to gold, because the gold to Nifty ratio was so skewed in favor of the Nifty that it seemed that Nifty is egregious and gold isn't. Is it the reverse this time? And can gold pause and can equity markets rally? I think that's the big question. Manav Chopra seems to be bullish on markets and specific buckets that you heard. He comes very rarely, so when he comes, you should certainly listen to it. Thank you so much, Manav. Really appreciate your time.
Thank you.
So guys, viewers, we got you the best of two worlds, right? Coach Bora gave you a lot of short-term ideas as well and some structural positional ideas. And Manav Chopra gave us his thoughts on what to do with the markets per se. Here are one more as we hit into the break. Mihir Vora of Trust Mutual Fund, speaking about his top bets in terms of the themes that he's bullish on.
The portfolios or the strategy, which was very skewed towards the investment phase, the investments theme, compared to 6 months ago or 8 months ago, probably is now a little more balanced towards both consumption as well as the industrials or the investments theme. But having said that, structurally, I would say that if we have to grow at 7 or 8%, we cannot do away with the investments theme. So while the government GST cuts will help consumption in the shorter term, ultimately long-term consumption has to be driven by wealth creation, by job creation, by income levels rising, etc. And that will require a huge, continuing and huge investment in infrastructure, real estate, as well as manufacturing capacities, because even if we say that there is no impact of tariffs on the services sector, the IT services, outsourcing, etc., they cannot create the 1 crore jobs that we need every year. We have to focus on construction, manufacturing, real estate, and infrastructure.
Welcome back. You're watching India Market Close here at NDTV Profit. Well, the Nifty has again come back below the 25,000 level, trading around 0.1% higher. The Nifty Bank has also cooled off a tad bit, trading around 0.2% higher versus that of 0.3% since we started the show. The mid cap 150 is also seeing beating, almost flat though, has slightly turned into the green, and the small cap 250 almost flat. But let's focus on Adani Power. It soars over 25% in the last 6 months. And why is this big turnaround? And what is this big turnaround story in fact in the making? Hiral joins us with a complete picture.
Thank you so much for that. It's an interesting move that you're seeing with regards to Adani Power. 25% up move in the last 6 months. Is the tide turning? That's the key question from here on. In fact, it seems like India's biggest turnaround story, which is in the making. Let's quickly understand why. Between FY14 to 21, the company actually reported a loss of around little over 12,000 odd crores. But that turnaround has started since FY22, where between FY22 to 25, they've reported a profit of nearly 50,500 odd crores. Now, from here on, if you see in terms of the guidance that the company has given, they're suggesting a bigger story that may still be in the making. If you talk about the guidance as well, an EBITDA of almost around 70,000 odd crores is what they're looking at in 6 years, which is only implying a 25% compounded growth. From there on, if you see the scale of the company, the ambition is staggering because they're looking at capacity expansion wherein they will be implementing 24 gigawatts of new capacity in the next 6 years. And what this means is it takes the portfolio to nearly 42 gigawatts. That's what we're talking about from here on. The capex is around 2.4 lakh crores for this expansion, and they're assuming a ROCE of nearly around 20 odd %. And on the back of this, the EBIT could actually exceed nearly 50,000 odd crores. In the past 12 months, the company has already achieved orders of around 7.2 gigawatts over the next 12 months. Now, what is the key differentiator for an Adani Power versus the peers? It's mainly the execution, because they have been focusing on faster completion, and that is what is accelerating the break-even and enhancing the project returns. If you see in terms of the timelines as well, Adani Power is completing projects in 3 to 4 years versus NTPC, which is a competitor which takes nearly 6 years in a similar kind of a framework. And they also have a lot of benefits that come in from the integrated ecosystem. What I mean by this is, if you have to look at the sister concerns as well for the likes of Adani Enterprise or Energy, they source coal from Adani Enterprises. There is transmission support coming in from Adani Energy as well. And this ecosystem helps them on the execution front as well, giving them an operational edge over peers. So overall, if you talk about the entire journey, very positive from here on. And in terms of the financials, FY25 EBITDA, 21,600 odd crores. The net debt to EBITDA is around 1.4 times, which is way lower as compared to NTPC as well. And the balance sheet has been pretty much strong, providing ample headroom for funding the expansion plans. Simultaneously, if you talk about NTPC, their FY25 EBITDA is around 54,400 odd crores, and the debt to EBITDA margin, that is 4.6 times. So that clearly tells you that the financials are also pretty much reasonable. So that's the turnaround that we're talking about, and the way the tide has turned for Adani Power.
It's quite a comprehensive picture on Adani Power. Hiral, thank you so much for giving us those details. Standard disclaimer, Adani Power is also a part of the Adani group of companies, and so is NDTV Profit. We're joined by Samir Dalal of Natwarlal & Sons stockbrokers on this side of the show. Samir, hi. Good afternoon to you. Your view quickly on Adani Power?
Yeah, so sadly, Mahima, I don't have a view on Adani Power, but your company, your sister company, has obviously done really well over the recent past. And like your speaker was saying, the execution has been good, but I don't cover this company, so no view.
Your quick view on the charts then.
I think it's a good buy on declines kind of a setup. Every time it comes close to the 20-day moving average, takes support from there and rebounds. Today also, if you see, the lows have been around that level. So yes, the 6-month performance has been very impressive, and has its share of volatility. So every time you get it close to the 20-day moving average, keep your stop losses about 3 to 5% below that, and you could continue to accumulate. But within the stable, I think Adani Port, that one's got a more steady movement, and today also it's seeing some traction. So why not put both of them on the radar?
Okay, all right. So that's the view with regards to where Adani Power stands. Samir, we had Manav Chopra earlier on this show, and he was talking about the way technicals are supporting the sector, and that he's still bullish on the entire space technically. But your view on the entire metal space as to where fundamentals are concerned, and if you were to pick one or two stocks, what would that be?
Yeah, so the metals counter continues to do well, and if China continues to cut its capacities, which are not profitable, which have high costs, then the entire metal pack will continue to do well. But we don't have an answer, because if prices move up, then some of those capacities start becoming profitable, right? So if you look at a commodity cycle, what happens in a commodity cycle is generally if prices rise, then also the inefficient plants kind of become profitable and they start reducing, which increases supply, which then in effect starts reducing the pricing. And then again, those calls. So, these are usually longer term nature, but it's difficult for, I believe it's very difficult for commodity prices to continue rallying up from here, especially when we have so many headwinds when it comes to global uncertainty. We don't know how the economies are going to perform with all of these taxes being, import duty and tariffs and all of that being put on countries. And so if there is a general slowdown in certain kind of exports from India and from China, which are the two large, kind of exporting, well, China is the largest, but India also has a decent share, not metals, but products, then obviously it can hurt metal prices. Now, having said that, I'm not very, very bullish on metals. But if someone was to take a call of investments in the metal sector, one of the counters that we remain quite constructive on is at this point is Hindalco. So the reason for that is we believe that aluminium is something that is going to see an uptick in demand, and supply is not coming up as quickly, there isn't that much excessive supply of aluminium. So we feel that place will do well. If you look at Hindalco, yes, they have their operations in the US, which are not vertically integrated. But at the end of the day, if you look at them as an entire unit, they're quite vertically integrated from all the way from bauxite mining all the way to the finished product, which is sold to the end consumer. I mean, to the end user, not the consumer, but the user who then sells eventually to the consumer. So being vertically integrated and aluminium having decent amount of demand and growth, I think that is the one counter that we remain very constructive on. Vedanta would be a great investment, but we have issues with the management, corporate governance issues, which is why we, tend to stay away from them. And when you look at the steel spaces, I think if commodities to do well, if steel prices were to move up, the biggest benefactor, I will say, will be Tata Steel, because they are again vertically integrated, but to a very large extent. So when you have your own iron ore, which they have to, huge amounts of it, they are able to get the entire benefit of the higher prices versus converters like JSW or Jindal Steel and Power. They have mining, but very limited, and they buy iron ore from the market. So the minute you buy iron ore from the market and the prices of iron ore follow the trend of steel prices, then you kind of, your margins don't increase and your profit doesn't increase. So if I were to take a call, Hindalco is the investment I would make. If I had to take a call because I feel commodities will do well, which I don't, then Tata Steel would be the one I take.
Guys, keep in mind, I mean, we're talking about some buzzing stocks now, but just keep in mind the dichotomy between what's happening today to the Nifty IT versus the Nifty Bank. There seems to be some traction in banking relative to the other indices. And I wonder if we see some bit of short covering or at least options being unwound on the short side on the banking side. So that's one. Two, remember, because of this whole talk around expiry and what could happen there, BSC, Angel One, and the ones which will benefit the most out of higher trading are actually lower in trade today. BSC is currently about 4% lower. Angel One is down about 5% as well. So these pockets have not looked very good. But while they are not buzzing, some others are. And Anushi Johnson with a list of some of the buzzing stocks. Anushi, good afternoon.
Hi, good afternoon, Neeraj. I'll start off with Jupiter Wagons first of all. Now, this is in focus on the back of a 113 crore of an order that we are looking at that they've received from Indian Railways. Now, what this pertains to? This is a order to supply about 9,000 of LHB axles that we are seeing, and this is worth approximately 113 crore. If you look at the company's order book as of June end, that stood at 5,972 crore. Now, coming to the second stock in focus is Apollo Microsystem. Now, this has been a strong gainer in this last month or even a 3-month period if you take the stock performance in context. Current update being that they are the step down arm Apollo Strategic has formed a pact with US based Dynamic Engineering, and this is for technology transfer, development as well as licensed production of rocket motors that we are looking at. The company already has been in this segment earlier as well. It has been responsible for production of rocket motors that we are looking at. So an important development on that front. Do note that the company anticipates a 45 to 50% of a CAGR to continue over the next 2 to 3 years period as well. The last one on the radar and is buzzing today is Newland Laboratories, and this is on the basis of a Japanese regulatory panel recommending the Nextol for approval. Now, this is the brand name for that is manufactured by Esperion Therapeutics, and this drug was filed by Otsuka in Japan. So, this is an important development that we are looking at now. Otsuka currently has about exclusive development and commercialization rights in Japan from this particular brand that we are looking at. So, this is Newland Labs, if we see the key role in this, that they have been a key partner to this particular company for the commercial production of this drug. So these are the 3 key stocks which are in focus today.
Thank you so much, Anushi, for that. That 5% move on Newland looking very, very strong. Kush, do you have a view with regard to a Newland sustainable, this kind of move?
Harsh, particularly for Newland, I think this is a good move, has come after some time. There's a possibility that this might sustain. Some of the other names also in the pack are starting to see traction in this name. But if you had a position, you should continue to hold. I wouldn't suggest adding on any fresh positions in Newland Labs.
Onto our bull versus bear segment, and today's a Nifty 50 counter, which has a 37% upside, Puneet. And when I read that, and when we both made eye contact in the morning after we both read it, that just was unreal. A TCS, a Nifty 50 counter having a 37% upside, top weightage on the IT index as well. Take it away.
Well, thank you for that. Definitely a huge upside from here for TCS. That's according to CLSA. They've come out with a brokerage note looking at a target price of over 4,200 rupees per share. They mentioned that valuations now seem very accretive to them, and international growth largely is expected to be strong in this particular year. That's the thesis of the report, and hence the positive upside that they are seeing on the stock as well. But on a contrary view, post quarter 1 results, Jefferies had actually said that revenue growth will be unlikely for TCS in FY26 as a whole, and this would be the 3rd straight year where we would have depressed earnings, to say the least, for the IT major, and hence a contrary view. And this one has the street divided. While a lot of brokerages do have buy calls, almost 65% of those who cover the stock, the upside is still quite limited in terms of earnings growth for the company. The second bull case, and here's where it gets interesting, because on 9th September, a couple of days ago, we did mention that Infosys has announced a buyback. There are chances that it may invigorate the whole sector, especially in the large cap IT, for talks at TCS2 for a buyback. We have the meeting today of Infosys, and we could see all these counters being active again starting tomorrow. So that'll be the one to watch out for. Apart from that, in terms of the bear case, we've seen largely a lower investment opportunities for the companies. They have been slightly behind the curve for the Gen AI, and I'm being very generous to them where I mentioned slightly, because we haven't seen all those deals largely come in the financials for TCS. So there is still a lot more to do, and it will happen in a course of time. But how quickly could that come into the numbers? That'll be something to watch out for. Third bull and bear case, and now again, we're going back to the point of US Fed rate cuts. We've been mentioning that the meeting on September 17th is key for the IT sector, because a cut in rates by the Fed will lead to higher spending by its customers for the IT companies, and that'll be something to watch. Global AI spending is also increasing and could be another growth opportunity as well. But we had a couple of months ago, TCS announced a 2% reduction in workforce, and while this will help margin in the short term, cost cutting is going to hurt in the longer run for TCS. That was some brokerages' view as well. Finally, in terms of valuations, 22 times price to earnings does give some fillip for investors to get in, but demand uncertainties largely continue to linger. So that's the bull and bear case for TCS. We have multiple triggers, but the Fed rate cut continues to be the major one. And today, with Infosys coming out with its possible buyback announcement, that'll probably lead the sector over the next couple of weeks, to say the least.
Okay, so that's how TCS is looking, both from a bull and a bear perspective. But let's switch focus. My colleague Danish Anand caught up with Maruti Managing Director and CEO Hisashi Takeuchi on the sidelines of the Siam Summit. Let's hear the exclusive chat which he had, where they discuss about the latest GST rejig and the outlook for the company. Listen in.
Takeuchi is the MD and CEO of Maruti Suzuki India. So many thanks for speaking to NDTV Profit. The government has given a major relief in terms of GST. Now there are just two rates, 18% and 40%. From Maruti's perspective, how do you plan to pass it on to the end consumer?
Yeah, of course, we are passing all those GST benefit to the customers.
We'll bring you that chat in just a few minutes. But Kush, the IT index, give us your view. Where does it go from now, and what's the view with regard to TCS?
I think IT index is once again within that range where from where it turned around last time, even the last time around. So I will keenly watch this space. I think TCS offers a good risk-reward ratio. That is true for most of the large cap names as well. So for particularly TCS, look at the support level, comes at 3,000 odd levels, slightly higher, but on the upside, meaningful resistance is at 32.25 and 33.60. So 1:2 kind of risk-reward ratios in place. The only issue here would be the missing momentum. So if you want to hold them for, let's say, quarter or two, maybe a little longer, then you could still get in for that favorable risk-reward ratio. But I wouldn't bet on the momentum piece just yet. In fact, on that point, I like Infosys as well. Not just because of the kind of news flow that's come about, the price action also. A couple of sessions ago, we saw a good move yesterday, follow through. Today, we're seeing some sort of profit booking. But that's exactly what I mean. Momentum's missing, but the risk reward ratio here is very, very favorable.
Okay. Well, it's that time of the show wherein we try and get you what dealing rooms are recommending in the session today. All of the dealing room chatter on our special segment, heard on the street. Somit Sekar Johnson with his khabars. Somit, what are you learning today?
Well, firstly, it's Electra Green. Now, that stock has been buzzing off late, and dealers are indicating that the new CEO appointment is expected to happen very soon. In fact, dealers are expecting the ex-CEO of Switch Mobility is a likely contender and might as well join Electra Green, and that announcement is expected to come out anytime soon for that company. The other stock that remains in focus today is Godrej Properties. Now, there are buy flows seen on large HNI desk, and dealers are expecting some positive corporate development to happen here. For Lupin, multiple dealing rooms are recommending sell calls on technical charts for this counter. It's up 0.2% in trade, but keep an eye out for Lupin. And then there is PNB Housing. Now, dealers are indicating that a large FI was a seller in this counter. The selling is likely over, and the stock could see a bounce back from current levels. And the next key trigger for this counter would be the CEO appointment. And there's a buzz of a appointment to happen from private sector. So keep an eye out for PNB Housing as well. And then there is Diamond Power. There's a buzz of a potential corporate development soon. The promoter holding, which stands at close to 84%. Now, this needs to come down to around 75%. Though they have time, there could be some development on this front is what dealers are indicating for Diamond Power. So keep an eye out for that counter as well. And then we had highlighted GAIL yesterday as multiple dealing rooms had recommended buy calls, and that stock is up around 3% in trade. And Axis Bank was also part of our segment yesterday, and that counter is also up, at least it was up around 2% at one point of time during the day.
Okay, all right. Thank you so much, Somit, for that. Of course, Axis Bank continues to buzz 1.5%. You spoke about those buy flows coming in yesterday as well. Continues to buzz today as well. Kush, do you have a view with regard to this one? And Axis Bank also, a GAIL. That was the other interesting one which Somit had on his list.
Very interesting. In fact, not the one to pop on my trading list of trading stocks. But yes, kudos to him. Good move on this one. Right now it's facing resistance, but the momentum could take it higher. Now, as far as Axis goes, I think this is again a case of short covering, as most of the banking names have seen. For me, it doesn't figure too high in the pecking order. There is ICICI Bank from a momentum perspective, HDFC Bank, and then perhaps in the private space, I would consider an Axis Bank. So if I had a position, I would actually look to book profits. If I've been holding them, holding the position for some time, I would look to book partially, if not fully, because now it is coming very close to that 50-day moving resistance of 1090, even the 1100 mark psychologically. Psychologically important resistance zone will act up. So if you had a position, might as well take some money off the table and look for trades in ICICI and HDFC Bank.
All right, Samir, within the banking pack and maybe within IT, any names that you are bullish, constructive on?
Well, I'm very bullish on the banking pack, right? We've been for quite some time. We've discussed Axis Bank also with your I've discussed it on your channel, where I said, look, a lot of the worst is priced in. It's trading at a steep discount to the likes of HDFC and ICICI. And yes, I agree that they had certain issues when it came to provisioning in the last quarter. But they had to take some provisions because of certain technical issues, as they called it. However, like I said, I've also had a chance to discuss it with the CFO, and it's come out quite clear that it's done with. I mean, you're going to see now the normal operations continue, and you won't see too much of this pain point anymore. So I feel there's a valuation upside there. So we are positive on Axis Bank. We think there's a re-rating possibility over the next 6 months. So that is something we remain positive on. IndusInd Bank is another one that we also think now, with the new management coming in, growth strategies being formulated and the business growing. IndusInd Bank trading at under book value is something that has room to re-rate on the upside. They've taken a lot of the pain out of the system. In the mid-sized banks, IDFC First Bank remains our top pick, even after this recent run-up that's happened. We still think there's more room. I think the stock can easily move to 90 in a year's time. And in the PSU banking space, I think Canara Bank is the one that we like the most, which looks, at the moment, given prices come off, looks attractive, and I think that has good upside. So banking, very positive. IT sector, unfortunately, we are more on the bear side. I kind of have to agree with what Jeffrey says, and that's been my view for some time, that the IT growth is not going to come through that easily. Everyone talks of the fact that a 25 basis point rate cut is coming, so people are going to spend more, and IT services will see an uptick. I wish a 25 basis points rate cut could determine how companies decide to spend billions of dollars, but that's not exactly how it works. They need to see growth coming through. Growth is something that has been challenging. Pricing in the US is moving up. Inflation is going to come into picture there. I don't know if the rate cuts are something that we're going to see continuing to happen. Based on that, I don't think IT spends in the current year are going to see a major uptick. Yes, this buyback news is positive, because what it does, it kind of creates like a little bit of a floor for the stocks, like Infosys, and if TCS comes out with a buyback, the stock may stop falling. But I don't see any trigger on the upside. And secondly, I'd also like to say that money is finite to investors, right? If I had to pick between an IT sector and something else which can give me a far higher growth rate, and I believe consumption is that sector over the next year in India, I'd much rather move my money to consumption, where maybe even valuations may be higher, but I believe that growth is going to come through. So for me, where finite money is there, IT is an award.
All right. So that's the long and short of it, both on banking and IT. And Samir, you've covered a large expanse, right? But time for a quick break. We'll leave you with an important word, though. Samir, we'll let you go. Thank you so much for joining us. We'll leave you with a word coming in from Hisashi Taikuchi, who's the Managing Director and CEO of Maruti Suzuki. We spoke to him on the sidelines of the Siam Summit. Danish Anand spoke with him. Listen in to a slice of that conversation, and we'll be back after that break.
Well, we have been joined by Mr. Hisashi Takeuchi. He's the MD and CEO of Maruti Suzuki India. So many thanks for speaking to NDTV Profit. The government has given a major relief in terms of GST. Now there are just two rates, 18% and 40%. From Maruti's perspective, how do you plan to pass it on to the end consumer?
Yeah, of course, we are passing all those GST benefit to the customers. And thanks for the government, this GST reduction, especially on the small cars, is a big reduction from 29 to 18, so 11% reduction. And when we calculate this back to the retail price, it's about 8.5% retail price going down. So we expect that we can start selling small cars very strongly. So this year, so far, the going rate of small cars is coming down. But now I think we can push it up almost over 10% from the current going rate.
Right. From quite some time, Mr. Bhargava, the chairman of the company, has talked about the demand for entry-level cars not being there. But, with the GST being rigid, do you believe that there will be a sudden rebound in demand for small cars? And would Maruti also start refocusing on entry-level cars?
Yeah, one of the reasons why the small car sales is going down is because of some safety and emission regulation is becoming almost par to the European level, which means the production cost went up. But thanks to this GST reduction, almost that amount of increase of safety and emission, the cost up is now coming down once again. So car is becoming more affordable for the entry level users. So I think entry car will revive once again.
Right. So we are just 2 weeks away from the festive season, and this has come in that point in time when we are seeing that many dealerships across the country, they are not accepting dispatches from OEMs, including Maruti. So how do you plan to address this issue, and how will you ensure that on 22nd of September all cars are there at the dealerships?
Yeah, actually we will be very busy because dealers they have some stock, but after 22nd of this month, I think many customers will come to the dealership, start buying car very strongly. So we will be very busy shipping out cars from us. Dealer will also very busy delivering cars from their premises.
Right.
So that will be a good time for us, for the dealers also.
Right. So, everyone waits for the festive season, especially for festivals like Diwali, to buy new cars. So, will there be any more discounts apart from the GST cut? Will there be any over and above discounts that the company would offer?
Well, first of all, this GST discount is a massive price change. So I think that itself already a very good reason for the customer to come and check the price. Our like a promotion, they can check at the dealership when they come.
Right. So very lastly, that you have already unveiled your electric car. When can we expect the electric car to get launched in India?
Yep. Our production is ramping up gradually. So first, in a few months, the production is limited. But the demand is very, very strong from Europe, where the demand of EV is very high, and the dealers are waiting for a long time, the arrival of EV from India. So our priority is given to a European market. So first batch went to UK, followed by the cars to continent. And then soon after that, we will start shipping cars to Japan also. Then we will also introduce the car to Indian market. So it will be after Diwali season.
Back with India market close right here on NDTV Profit. Now, our guests are joining in to try and assess what to do in the last 1 hour of trade, because remember, today market is slightly different in that we may be kind of holding out, but a lot of broader market portfolios might be sulking. Anybody who's got Nifty IT in the portfolio might be sulking as well. A lot of individual names which are very popular the last few days are coming off. The one with the big deal, Tega Industries, is down about 2% as well. So there is a bit of an issue, but the Adani Group stocks are holding out very, very well. So keep that in mind. Keep those in mind. Rajesh Palvia with us, and on the fundamentals, Siddharth Khemka also joining in. Gentlemen, both of you, much appreciate your time. Rajesh, I want to come to you. Holding out 25,000 thus far, it's been a bit of a, how do I say, an Achilles heel that we've not been able to hold that level out. If we close above this today, do slightly better tomorrow, on a day when the rupees hit a new low, as the ticker is telling you, could that be a positive for the markets?
Good afternoon. So, looking at the structure for Nifty, we are positive on market as Nifty is comfortably holding above to 20-day, 50-day moving average. Another data point, the major call concentration area was at 25,000 level. But in today's session, as Nifty is now trading about 25,000 levels, some call writers have covered their position. So unwinding is happening from the call writers front at 25,000 strike, 25,050, 25,100 is also showing sign of unwinding action. So this is another positive development in terms of structure for Nifty, as call writers are now shifting their position to higher strike price. So I think there is a possibility that we may see furthermore continuity of uptrend, and 25,150 to 25,200 could be the next target for Nifty. Though on the lower side, 24,900 needs to keep as a stop loss for Nifty. For Bank Nifty, again, the positive development is 54,500 is comfortably holding by the Bank Nifty, and now we are negotiating with 20-day moving average, which is almost placed at 54,700, 750 zone. So I think any breakout above 54,750 can also give some push from the Bank Nifty also to support the indices, and I think then we may see some short covering action that can take Bank Nifty higher to 54,900, even 55,000 level. So here also one needs to remain on the long side of trade till 54,500 is holding by the Bank Nifty also. As well as if we look at the sector where we are seeing, strength is still there, like, metal is also showing sign of strength. FMCG is holding at higher band of this rally. Automobile is also at a higher band of this momentum. So I think the sector where outperformance was there is still holding the ground. There is no as such significant profit booking is happening in those sectors. So market is confident on those sectors. So we believe that, market can give breakout about 2,500 and then 25,000, and then possible target toward 25,200 we may see in the coming days.
Let's also bring in Siddharth Khemka into the conversation. Motilal Oswal. Siddharth, let me ask you that one question, because Motilal has come out with a report today morning with regard to a Bajaj Housing Finance. This one is a stock which IPO'd at 70 odd, went all the way up to 180 and has retraced from there. You've given it a target price of 120. It's a top franchise. Not much of an upside you're seeing. Give us that rationale.
So hi, Harsh, good afternoon. Yes,
Good afternoon.
So while you have a large franchisee and one of the larger housing finance companies, we see that the growth in the last 5 years, if you see, has been, the AUM CAGR has been close to that 30 odd %, and in terms of AUM, they have 1.2 lakh crore. So they have, so what we see is that yes, it has one of the strongest brand name, asset quality, strong growth, return ratios are, however, going forward, we are seeing are expected to moderate in the range of 13-14% due to the increasing competition, low yield in the prime home loan segment. Plus, I think what is happening is that the IPO came at a very high valuation, and that is something that the market we have seen across stocks, across strong franchisees with different business segments where the IPO came at a very high valuation because of the parentage. The other name being Tata Technologies again came with a very high IPO. So the IPO valuation being high, I think the stock continues to consolidate, and hence what we see is that going forward, what we are forecasting an AUM CAGR of 22%, ROA of 2.3%, and ROE in that mid-teens of 13-14%. And hence we believe that with a valuation of 3.6 times on FY27 price to book looks a bit on the higher side, and hence we see limited upside from current levels.
So that's the thesis on Bajaj Housing. Rajesh, your picks for this afternoon.
So Harsh, first stock is from FMCG Pack that Britannia is looking promising. The way stock is continuously showing buying interest, and on a weekly as well as on the daily chart, stock is moving in upsloping channel. Continuity of uptrend is there. So we are projecting target of 6,500 for Britannia. On the downside, one needs to keep his stop loss towards 6,240. Another stock where we are holding bullish view, that is from the pharma space. Dr. Reddy is looking promising. If we look at the last 3-4 week price behavior of this counter, stock managed to give breakout of consolidation range. And looking at the data, there is a long built up on derivative data also. So we believe that Dr. Reddy may extend its gain. Possible target towards 1345. On the downside, 1280 needs to keep as a stop loss.
Okay, thanks for those calls, Rajesh. Of course, we'll come back to you in another 10 minutes or so for the BTST call of the day. But as the festive season begins, what does the discount trends in the quick commerce and e-commerce space look like? Will you save more money, or will your pockets feel light this festive season? Mahima's here with a complete research on how to feel your pocket to be the heaviest. Mahima, how best can I get where can I get the best deals?
So I'll tell you, okay, what I've tried to do here is, break down how category-wise discounting has been done, and then I'll tell you as to what platform you're supposed to go to this festive season and buy groceries from, okay? So the first plate that I was talking about, the category-wise discounts, highest has been seen in personal care, followed by packaged goods at 20%, then basic staples at 19%, then home care, beverages and dairies. Now the next plate is, what platform should you actually go and buy your groceries from? The answer is, if you're ready to wait for a day, you should go to DMart Ready, because there the average discount is highest at around 23%. And if you're in Bangalore and you want quick deliveries, then you should go to Amazon, because that is at par with what DMart Ready is giving at 23%. But if you're not in Bangalore and you want quick deliveries, then you should apply Zepto Super Saver and take a discount of around 21%. Then followed by Flipkart Minutes, Instamart Max Saver, BB Now, and Blinkit, Zepto and Instamart without their Max Savers, it's at 15%. In terms of how discount trends have evolved in the past 2 years, that's also an interesting data. In October 22, the discounts were at around 7%. Then competition started to heat up. More and more players have been entering the quick commerce space, the faster delivery space, and then it went to 11% in October 2024, went to as high as 16% in Feb 25. And since then, the last data indicates, as per Jeffries, that it's at around 17% in September 25. So your groceries are 17% cheaper on an average on these quick commerce and e-commerce platform. Now, in terms of assortment related bifurcation as to who's got more products to buy from, Blinkit leads the pack, has in top range of assortments available on its platform. Swiggy, Instamart has also kind of caught up in that race and is at par with where Blinkit stands. In terms of Flipkart Minutes, that has actually improved since June 25, with only 4 items now unavailable versus 7 to 8 items earlier. But in terms of where DMart and JioMart stands, they need to improve in terms of where premium category comes into picture. In terms of an interesting analysis that I saw in Axis Capital report, that was D2C versus non-D2C brands, and how this trend is actually faring. D2C brands are 2.5 times more expensive versus that of non-D2C brands. For example, if you take milk of Amul versus something like a Sid's Farm, it's priced at 42 rupees versus that of 33 rupees. Whole Truth Peanut Butter is at 320 rupees where D2C brand is concerned versus that of 150 of Sundrop, and so on. Even in Minimalist, the price is at around 499 for a D2C brand, and which is Dove, which is a non-D2C brand, is priced at around 273. So the price gap is quite a bit when it comes to D2C and non-D2C brands. Now, with regards to the shopping cart sample, as to, you know, that'll give you a picture as to where you're exactly going to shop, where you should in fact exactly go and shop from. In a total bill, we've tried to pull that out for you. I've taken items from each category and tried to break down the prices, and this actually concludes that the lowest bill has come in from DMart Ready, because here the average discount is at around 23%, then followed by something like an Amazon now, but here the caveat is that it's only present in Bangalore as of now, then something like a Zepto, and then something like a Blinkit, and then we have Instamart, and the most expensive one right now is Zepto without its Max Saver. But if you apply Max Saver, Zepto turns out to be cheaper than Blinkit as well as Instamart. So this is the overall view of the discount trends going on, and of course where you should shop from when it comes to your grocery needs.
Well, one is of Honorable Finance Minister, who's helping us all save money, and the next best person helping us do that is a Mahima. So stay tuned to NDTV Profit. More of that will come up very, very soon. Waiting for more Mahima, but while I do that, Siddharth Khemka, how do you play this? How do you play this theme? What's the best way to play it from a stock market perspective? Mahima is obviously giving us all the savings. Where do we invest it?
Definitely, I think that was a very pretty comprehensive overlay of the way we can capture the discount. But I think the competitive intensity has definitely come down, and as we have seen, Blinkit in the quick commerce space is showing a lot of improvement in terms of market share, in terms of growth, and the pricing discounts has also come off. So I think the biggest beneficiaries in this entire space, with Zepto now becoming more focused on profitability, on cost, will be both of the listed players, which is your Eternal and Swiggy. So we have recently upgraded the entire sector. We have upgraded the target price of Eternal to 420. We had a neutral rating on Swiggy, and we now believe that there are enough tailwinds in the sector for both of these players. So we have upgraded Swiggy to a buy with a target price in excess of 500. So our preferred choice in this space, we believe that Eternal with its Zomato, which is a food delivery business that continues to generate free cash flow consistently, and in the Blinkit, which is a quick commerce, things are turning around. The dark store expansion are coming down. Whatever expansion they have done, their profitability is improving. And same goes for Swiggy, market share gains, both in the food delivery as well as in the quick commerce space. So the preferred pick is a Zomato, Eternal, followed by Swiggy.
Okay. All right. So that's the pecking order. But onto our special segment, Profit Intelligence, and we put the spotlight, as promised, on an Aurobindo Pharma. Stock has surged in trade after Advent strikes a 4.1 billion euro deal to sell the generic drug maker Zentiva. Varsha's here with all of the intelligence coming out of that one. Varsha.
Right. Thank you so much for that. You know, Aurobindo Pharma is actually buzzing with no deal on Zentiva, because if you see, the stock has seen underperformance since September 19. So if I were to compare its returns with Nifty Pharma from September 19 to September 10, Aurobindo shares fell almost over nearly 5%, while Nifty Pharma saw almost a positive returns of 0.3%. Now, why the underperformance? Now, the Zentiva deal could have really strained, Aurobindo's balance sheet. And why the underperformance that we are seeing? On 20th August, when the reports came out that Aurobindo is expected to buy Zentiva, which is a generic pharmaceutical company, the stock went almost 5% in down, and because investors were not liking that, how could Aurobindo buy Zentiva at such a hefty valuation, considering the geopolitical tensions and high tariff situations, and the Zentiva deal could have really strained Aurobindo's balance sheet, and one of the reasons why investors were not liking and the stock did not perform well. why the cheer today, if you see, because reports say that the GTCR is expected to buy Zentiva at almost $4.8 billion. So that overhang on Aurobindo's balance sheet is it's not there, and this is one of the reason why, if you see, the stock is up almost 4 to 5% in trade today. So no overhang on the stock, and the strain on the balance sheet, which was investors' concern, is no more there, and one of the reasons why you're seeing the stock is on buzz. On the valuations, if I were to talk about, considering FY26 and FY27, considering revenue and EBITDA, the stock is available at almost 17x PE basis FY26 and 14x PE basis FY27, and analysts are also recommending, for the buy recommendation. Almost 22 analysts are saying buy with potential of almost 21%. So overall, no Zentiva deal is making what Aurobindo Pharma stock buzz.
The stock is, Varsha, thanks for first throwing light on this. Really appreciate. And the stock has had an interesting day of trade. Siddharth, did you guys discuss about this? And any thoughts here on Oro as it clocks in the highest point of the day levels now?
So, Neeraj, I think we are yet to discuss on this particular issue, but overall, what we see is that in the post the Q1 numbers, while the numbers were lower than expected, and largely because there were miss in terms of higher operational costs related to the new plants, pricing headwinds in the API segment. But what we see is that Oro has been consistently delivering strong execution, especially in the EU market.
Siddharth,
Yeah.
sorry, Siddharth, I'm just cutting you because I think we've got your audio slightly patchy, so it's coming in bits and pieces. We just need to maybe see if I can get a better line there. But Rajesh, the same question to you really. With the kind of surge that Aurobindo Pharma has had today, now trading at the highest point of the day, do you believe people can go and buy it afresh, or now it's too late?
So for trader, it's late, but those who are looking for investment opportunity, they should also wait, because if we analyze the overall structure for near term to short term, it's in downtrend only. After today's spike, still stock not managed to give breakout of its falling channel trend line on the higher side. So we will wait. 1125, 1130 is the important level or stiff resistance looking at the near term, short term structure. If at all stock crosses above 1125, 1130 zone, then yes, there could be a chances that some short covering action could trigger in this counter, and then maybe we may see some more upside going forward for this counter. So wait for another 1 or 2% kind of up move. Then one can look to buy this stock for short-term investment perspective, as already stock has corrected significantly from its all-time high trajectory, and stock has shown sign of recovery from the oversold trajectory. So we'll just wait for 1125, 1130, then we will initiate buy for it.
Rajesh, the BTST call of the day.
So from capital goods space, BHEL is looking attractive. The kind of up move which we are observing on daily chart, stock managed to give breakout of its falling channel on daily chart. So looking at this breakout, we believe that BHEL can extend its gain. Possible target towards 237, 238 we may witness on the BTST point of view. So one can buy with stop loss of 226.
Okay, 226. It's after a while the BHEL stock coming into focus. We're not quite seeing too many capex related stories come into play per se. So keep that in mind. But BHEL trading at the high point of the day and doing very well. Rajesh, we didn't get a chance to talk about the two stocks which are sulking big time in trade today. One of them is BSC, the other one is Angel One. Clearly, the issues, if indeed the SEBI paper comes out and says that the expiries will be of a different modality or may not be there, and therefore could there be earnings issues here? Are the charts looking weak enough for the stocks to be much lower?
So we have witnessed the corrective move in this counter since this SEBI has come out with the changes in the derivative expiry, as well as again the new consultation paper to shift weekly expiry to the monthly expiry, and maybe it could be a one-day expiry for all the exchanges. So I think these all changes are, keeping the pressure on this platform companies like be it BSC, Angel One, Broking Company. So I think some more continuity of, profit taking we may see in this counter, because whatever pullback which we have observed in last couple of days was not sufficient to take out this stock from the oversold trajectory also. Still trend is down, a series of low top, lower bottom formation is taking place. BSC is now trading below to 20-day moving average. The same is happening with the Angel One also. So I think near term, short term structure are still in the weaker zone. Shorts are still open for this counter. So maybe if it's sustained below to furthermore to 2200 levels, I think on the downside, the next target for BSC would be around 2080 to 2070 would be the next target. For Angel One, again, it's trading near to very critical support area for near term to short term, which is placed at around 2200. Any breakdown below 2200 can take Angel One further lower to the target of 2120, even 2100 also.
Got it. Okay. Siddharth, do you have any thoughts? Because, I mean, one thing is, Siddharth, that maybe there will be slight earning damage, maybe there won't be. But the other thing is that will the street compress the valuation multiples of these businesses, because the street will feel that SEBI in its wisdom is trying to make sure that the rampant trading activity will be curtailed at all costs. Does that bring down the multiples? And therefore, does BSC, or stock of BSC as well as Angel One and some others, stay relatively subdued?
So, Neeraj, definitely, I think that is a concern or overhang on most of these broking companies, or you can say the exchanges that are there, with the SEBI clearly looking to curb the excessive speculation in the market, especially from the retail side. For BSE, there is one more negative that has happened, is that the weekly expiry shifting from Thursday to Tuesday. We expect that to be a big negative, and we expect at least 300 to 400 basis points of premium turnover market share loss because of this. And over and above that, the talks or media reports of having a consultation paper from SEBI of moving from a weekly to a monthly expiry. Definitely there will be the weekly expiries turnovers that will go away, and that will impact the overall business. So that keeps an overhang. But if you look at some of the players like Angel One, they are trying to diversify, get into the wealth management, AMC business. I think from a longish term perspective, some of the more diversified players like an Angel can do better. But clearly for a BSE, we believe that near-term overhang continues, and definitely there is a big risk of the compression in PE going forward.
Got it. Okay. Compression in PE, viewers, and remember that that's a very powerful antidote to a stock price move, because even if the stocks were to show some good earnings growth, the multiples compression could actually be something that hurts the street, hurts the stock for sure. Just as we break out, and just as we rather wrap up, some breakout stocks, I wonder, we've spoken about, of course, Aurobindo, but Axis, we can't ask Rajesh Palve about Axis, but I think that stock is just maybe perking up in trade today. So watch out for that one. Tata Investment, Mazagon Dock are some of the others one. Okay, can I ask you about Mazagon Dock before we wrap up, Rajesh Palve?
Sure. So yes, so there is a buying interest again came back in most of the defense related stock. Mazagon Dock is one of the stock where again after consolidation of 3-4 week, now stock is showing sign of recovery. So looking at the near term structure, yes, there is a breakout on daily chart. Stock is holding about 20-day moving average. Maybe we could see target towards 2850, 2900 in the continuation of this pullback. On the downside, one needs to keep stop loss towards 2770 to hold the position in Mazagon Dock. Even HL, BL, both stocks are also showing sign of strength. So I think this whole pack is coming back again on the buying flavor. So maybe we can see continuity for another couple of days for these stocks.
Okay, thank you so much, gentlemen, for coming in and speaking with us. That's the take coming in on some of the defense names, and surely some buzz. BL yesterday was the top Nifty gainer. Let's pull up the Nifty and thereafter see what stock is the top gainer today. 25k plus, at least holding for till this point. Will be interesting to see whether we're able to hold that level because Kush suggested that that level is going to be the crucial level to close above if the Nifty has to likely go back into a rally mode. So that will be the key level. But let's look at the intraday as well, and the Nifty Bank is up around 0.2%, so a 0.5% higher on the Nifty Bank. That also has cooled off from the highs. The Nifty Bank from the highs of the day just about off, but it's a very, very range bound day of trade. Mind you viewers, it's just about 80 points in which we've traded on the Nifty 50, and the Nifty Bank also reflecting that. Look at that, just very, very tight range. Okay, maybe it's now 97 points, but still extremely tight. Now let's look at the heat map, and from the heat map we'll probably gather some nuggets. Adani Enterprises is the top gainer today, nearly 3% higher. Shriram Finance, Axis Bank, some of the other names, it's a mixed bag as such. No real trend visible per se, but 0.5% higher on a TCS, and some of the IT names seeing some pressure. Infosys down 1.4. TCS of course perked up, but Wipro is the other one in that bag of the top 10 losers on the Nifty 50 today. So broadly, that's how it's played out. Let's look at sectors very quickly, and again, just the range-bound nature of it. Oil and gas, of course, media up 1%, energy up nearly 1%. Those are some of the smaller sectors, and therefore just brushing those off. But the PSU banking index is up 0.7%, so that's among the larger ones. That's one of the big gainers. 0.5% higher on the Nifty Pharma and the Infra index as well. So broadly, that's how it's played out. But IT is the key culprit, and auto, the two sectors which have done so well, are seeing a bit of a mild cool off, if I can call it. The Nifty India Defence absolutely flat. Let's pull up the advanced decline, see how the broader markets have also performed. Well, you see the breadth, how it's gradually shaped towards a 1:1, and at close, ever so close to 1:1 at close. You likely see that kind of a trend play out both on the Nifty mid cap and the small cap indices. But what you will also see is the kind of tight band in which we've played out. So absolutely flat on the Nifty mid cap. The Nifty small cap index also absolutely as flat as it can get. And again, very, very range bound, just about 100 points in which it's traded in terms of a band, but closing at the absolute flat line, the Nifty small cap. Now let's quickly just talk about some of the names which have buzzed today, and the BSE 500 top gainers, top losers will show us that. Some, of course, on the back of volumes, but something like a Chola Holdings has erupted 4% higher. Aurobindo Pharma, we spoke about. Gujarat Ambuja from the lows of the day has really seen a good rally. HLE Glasscoat back in the picture, 4% down, 5% low on Angel One. BSE 2 was down under pressure, so that trade is reversing itself to some extent. Shopper Stop is down 4, and then you have some of the other names also, but no material movers there. But broadly, that's the take with regard to the gainers and losers on the BSE 500. Quick take with what to watch out for tomorrow. You have US CPI, the big number coming in, and this is, mind you viewers, the last CPI number before what could be a set or a single rate cut also. So that's something to keep your eye out on. Those are some of the adjustments in terms of dividends that you want to look out for. And right, with that, we're out of time on this edition of India Market Close. From Neeraj, Mahima, myself, and everyone who puts this show together, thanks so much for watching. Stay with us on NDTV Profit. Market Express will take all of the action forward.
Good afternoon, you're watching Market Express. I'm Sanjana. Let's start. Markets trade in a range through the day. Ends near day's high. The Nifty ends the day above 25,000. Gains for the 7th day in a row. Adani and Shriram Finance emerge as top Nifty gainers. Sensex ends flat with a positive bias on weekly expiry day. Meanwhile, broader markets underperform benchmarks. Nifty mid-cap 150 and small-cap 250 end flat. Nifty oil and gas emerge as top sectoral gainers led by Gujarat State Petronet and GAIL. All sectors end in the green except IT and auto. The rupee settles at a record closing low against the US dollar, closes 34 paise lower versus the US dollar. Tega Industries stock pairs opening gains. This was on the back of news that Tega Industries has acquired Molycup for 13,000 crore. Tega will hold a 77% stake in a new special purpose vehicle, with Apollo Funds owning the remaining 23%. The deal is funded through $361 million from Tega, including debt and equity, plus Molycup's internal accruals. But Dalal Street was concerned that promoter stake in Tega drops to 64% from 74.8%. Molycup's lower EBITDA margins of 11.2% compared to Tega's 23.5% raised doubts. Tega aims to reduce Molycup's debt and boost margins to 14 to 15% in 3 years. The Shipping Corporation of India surged over 5% in trade today. The company has acquired a second-hand VLGC, a very large gas carrier named Shivalik. The ship has over 54,000 metric tons of deadweight tonnage and over 47,000 gross tonnage. VLGCs are designed to transport large amounts of liquefied gases. This acquisition boosts the company's gas transport capacity. The Ministry of Environment has introduced a new rule to fast-track environmental clearances for rare earth elements mining. Public consultations are exempted, but projects need Central Expert Committee approval. Companies must submit detailed environment management plans. The rule aims to accelerate mining of critical, strategic and atomic minerals. This could benefit companies like GMDC, NMDC, Hindustan Copper and Hind Zinc. Aurobindo Pharma stock rose after it exits the race to acquire Zentiva. The stock had dropped 5% on 20th August amid acquisition rumors. Aurobindo was a front-runner to buy the generic drug maker for 5 to 5.5 billion. Concerns over geopolitical risks and balance sheet strain fade with the deal's collapse. Adani Power secures an additional 800 megawatt project from the Madhya Pradesh Power Management Company. This boosts its total awarded capacity to 1,600 megawatts under Green Shoe option. The 21,000 crore project will supply power at 5.838 per kilowatt. It marks Adani's fifth major power order in the last 12 months. The company aims to reach 41.87 gigawatts capacity by 2031 to 32. Dr. Reddy's Laboratories acquires the Sturgeon portfolio from Janssen Pharmaceutical for 50.5 million. The deal spans 18 markets including India and Vietnam. It bolsters Dr. Reddy's central nervous system portfolio. The acquisition marks the company's entry into the anti-vertigo segment. And Japan will approve a new cholesterol-lowering drug, Nextolol, made by Esperion Therapeutics. It uses an API from Newland Labs. The drug targets bad cholesterol and has cleared a key regulatory hurdle. Newland is a vital partner in its commercial production. Citi remains bullish on OMC stocks despite market concerns. HPCL, BPCL and IOCL show strong earnings and government support. Fears of Russian crude import issues and fuel price cuts weigh on sentiment. Recent price drops offer a good buying opportunity. Jefferies maintains buy rating on Adani Ports. They set target price at 1,815. The management guides for 1 billion tons cargo by 2030. This leads domestic ports and international expansion. The company focuses on EBITDA growth over volume alone. Margins expand alongside integrated logistics. Leadership eyes 14 to 19% year-on-year EBITDA rise in FY26. They expect 12 to 14% volume growth too. US tariffs show limited hit on port volumes and capital allocation stays sharp. Macquarie flags unrest impact on Nepal and Indonesia. Nepal makes up 8% of Dabur's sales and 14% of their FY25 sales. Asian Paints, Kansai Nerolac and Hindustan Unilever each expose about 1% of FY25 sales. For Berger Paints, this number is estimated at 2% of the overall sales. Jupiter Wagons bags a 113 crore order from the Ministry of Railways. The company will supply 9,000 LHB axles. Its total order book now stands at 5,972 crore as of June 2025. Apollo Microsystems signs a pact with US-based Dynamic Engineering. Its subsidiary Apollo Strategic will handle tech transfer and license production of rocket motors. The move aims to indigenize propulsion tech for multi-barrel rocket systems. HSBC turns bullish on NTPC, upgrading it to buy and raising the target to 400. The company leads in power generation with new bets on battery and nuclear tech. With capex plans underway, HSBC sees a strong long-term earnings growth. SEBI's interim order on Sprite Agro's suspicious trading activities faces regulatory hurdles as the company plans a bonus issue and a dividend. This is likely to cost the investors unaware of the regulatory risk around the company. On to an NDTV Profit exclusive. Despite a steep GST hike on carbonated drinks to 40%, Coca-Cola plans no change in retail prices. Industry sources say Hindustan Coca-Cola will hold MRP across its beverage range. Fruit juices remain under the 12% slab, and Kinley water may see a price cut soon. Amazon now has rolled out its 10-minute delivery service in Mumbai following strong growth in Bengaluru and Delhi. The ultra-fast service lets users order daily essentials, groceries, personal care, electronics and more for near-instant delivery. To support this, Amazon has set up over 100 micro-fulfillment centers across the 3 cities. With customer demand rising 25% month-on-month, the company plans a nationwide expansion by the year end. Health insurance premiums become lighter on the pocket from September 22nd as GST is exempt on all individual health insurance plans, including family floaters and senior citizen policies. However, many insurers have set conditions. Some offer the benefit only on policies bought after that date, while others continue charging GST until then. For renewals falling after September 22nd, no GST will be applied. Coverage for GST-free plans generally start from September 22nd as insurers update systems to pass the benefits to customers. Gold prices edged lower, hovering near record high as investors awaited US consumer inflation data due later in the day. This would be key to watch after weaker than expected producer price figures that reinforced expectations of a Federal Reserve rate cut next week. Gold has risen at least 40% on a year-to-date basis on the back of geopolitical tensions, rate cut bets and tariff policy uncertainty. Mexico plans to impose up to 50% tariffs on cars from China and other Asian countries. This move aligns with US protectionism ahead of North America free trade talks. Tariff will hit over 1,400 product categories, including auto parts, steel, toys and furniture. Rates vary from 10% to 50%, targeting nations without trade deals like China, South Korea and India. The step protects jobs in Mexico as the country becomes the top buyer of Chinese cars. Mexico plans to raise tariffs on cars imported from China and other Asian countries to 50%, up from 20%. The move is part of a broader overhaul to protect Mexican jobs and industrial sectors. Economy Minister Marcelo Ebrard says the tariffs are within World Trade Organization limits and aims to prevent Chinese vehicles being sold below reference prices. The decision comes amid US pressure on Mexico to limit Chinese imports and protect regional trade interests. The policy also targets other goods like steel and textiles. China condemns the move, calling it coercion, and pledges to safeguard its interests. Alibaba plans to raise about $3.2 billion via a zero-coupon convertible bond to fuel its international expansion and cloud computing growth. Nearly 80% of the funds will upgrade data centers, technology and services to meet rising cloud demand. The remaining 20% will boost global e-commerce market presence and efficiency. The bond matures in 2032 and converts into Alibaba's US-listed shares. Alibaba is a leading AI investor in China, pledging $53 billion over 3 years. The company sees AI as a key driver for cloud revenue growth and global commerce expansion. The UK's pharmaceutical sector is reeling as US giant Merck is scrapping its £1 billion expansion in London's King's Cross. The company is shifting its life sciences research to the US. This means 125 employees lose their jobs. Industry experts warn that more major firms may follow suit, citing the UK's declining competitiveness. With pressure mounting from US policies, the government is pledging support for affected workers. Swedish buy now, pay later giant Klarna is making waves on Wall Street, debuting with a market value soaring past 19 billion. Shares are jumping 30% from their IPO price, reflecting strong investor enthusiasm for the company's challenge to traditional credit cards. With 93 million users globally, Klarna is capitalizing on its popularity, though concerns are lingering about its model encouraging overspending. The firm is eyeing further growth as it navigates a recovering US market. The Reserve Bank of India acquires a 4.16-acre plot at Nariman Point from Mumbai Metro Rail Corp for 3,471.82 crore with stamp duty paid at 2,083 crore. The deal is a 90-year lease below the reserve price of 5,173 crore. The plot offers a buildable area of 1.6 million square feet and includes space for relocated political offices. Nariman Point is a key South Mumbai commercial hub, and RBI plans institutional development to expand its Mumbai presence. On to some national news. The Supreme Court has ordered a special investigation team with both Hindu and Muslim officers to probe the 2023 Akola riots in Maharashtra. The court is slamming the state police for a biased investigation after a 17-year-old petitioner's assault case was ignored. With 1 death and 8 injuries reported in the communal clashes, the SIT is being tasked with ensuring a fair probe. This unprecedented move is sparking discussions on police impartiality across India. The CRPF flags serious concerns over Rahul Gandhi's repeated violations of security protocol. In the letter, the force detailed multiple lapses, cautioning that such actions could compromise his safety. The letter highlights that the leader of opposition has often ignored established security rules, with the CRPF warning of risks if the pattern continues. Over 200 passengers on an Air India flight to Singapore faced a distressing ordeal at Delhi airport due to malfunctioning air conditioning and electrical systems. Passengers were stuck inside the Boeing 787-9 Dreamliner for nearly 2 hours. Social media platforms showed video evidence of passengers attempting to cope with the uncomfortable conditions. In a statement, the airline clarifies that Delhi to Singapore was delayed due to a cabin cooling issue on ground prior to departure. In a big relief for Aishwarya Rai Bachchan, Delhi High Court orders the protection of the actor's personality rights, bars misuse of her name, photographs, including misuse through AI. The Maharashtra government has granted a special age relaxation for candidates who exceeded the maximum age limit between 2022 and 2025, enabling them to apply for the ongoing recruitment of over 15,000 constable posts in the state police and prison departments. Charlie Kirk, a leading conservative activist and close ally of US President Donald Trump, was fatally shot during an event at Utah Valley University. He was 31 years old and a co-founder of Turning Point USA and was holding a debate event when a single shot hit him in the neck. The video footage shows him collapsing as blood poured from his wound, causing panic among the crowd of about 3,000 attendees. The suspected shooter, believed to have fired from a nearby rooftop, remains at large. A person was taken into custody but was later released. US President Donald Trump called Kirk great and legendary and vowed justice. Bali is grappling with its worst floods in a decade as torrential rains have claimed at least 14 lives and have left 2 people missing. Rescue teams are struggling to navigate submerged areas with rivers bursting at their banks and landslides shutting down major roads. The provincial government is declaring a week-long state of emergency. While popular tourist spots are facing severe disruptions with severe weather warnings still in place, authorities are urging caution as the island battles poor infrastructure and clogged drainage systems. Spain's parliament is delivering a major setback to the socialist-led government, rejecting a bill to cut the work week by 2.5 hours. Opposition parties alongside the Catalan Junts are blocking the measure, arguing it burdens small businesses. Labour Minister Yolanda Diaz is vowing to reintroduce the plan to reduce hours from 40 to 37.5. This defeat is piling pressure on Prime Minister Pedro Sanchez, who's grappling with a stalled budget and ongoing corruption scandals. India dominates UAE in their Asia Cup 2025 opener with a 9-wicket win. UAE was bowled out for 57, their lowest T20I score against India due to Kuldeep Yadav and Shivam Dube's 3-4 bowling efforts. India chases the target in a record 4.3 overs, with Abhishek Sharma scoring 30 and Shubman Gill unbeaten 20. Suryakumar Yadav also contributed to the quick chase. The performance gives India a huge net run rate boost and a strong start to their title defence in Dubai. Next up, India faces Pakistan in a key Group A clash. South Africa beats England by 14 runs in a rain-shortened 5-over T20 match in Cardiff. South Africa posted 97 for 5 in 7.5 overs before rain further reduced the match to 5 overs per side. England, chasing a revised target of 69, managed 54 for 5. Aiden Markram top scored for South Africa with 28 off 14 balls, supported by unbeaten Donovan Ferreira and Dewald Brevis. Jos Buttler led England's chase with 25 off 11 balls, and the win gives South Africa a 1-0 lead in the series ahead of the next game in Manchester on Friday. And that's a wrap on Market Express. Stay tuned to NDTV Profit for Profit 360 up next.
In a bold move to democratize financial insights, your channel, NDTV Profit, is
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you, inviting social entrepreneurs to apply. Green Talk Social Impact Awards 2025, where innovation meets impact.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you, inviting social entrepreneurs to apply. Green Talk Social Impact Awards 2025, where innovation meets impact.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore.
Nifty ends above the 25,000 mark after gaining for the 7th consecutive day on the back of renewed optimism around US trade talks. Benchmarks outperform the broader indices. The rupee hits a record closing low against the US dollar, falls 34 paise to close at 88 rupees and 10 paise to the dollar. SEBI's interim order on Sprite Agro's suspicious trading activities faces regulatory hurdles as the company plans a bonus issue and a dividend. It's likely to cost the investors unaware of the regulatory risk around the company. Private health insurers roll out insurance policies without charging GST to pass on the benefits to consumers after the GST Council exempted life and health insurance policies. Amazon expands its 10-minute delivery service, Amazon Now, in Mumbai, after seeing exponential growth in Delhi and Bengaluru, establishes over 100 operational micro-fulfillment centers across the 3 cities. Hindustan Coca-Cola will retain the maximum retail prices of all its beverages. Sources say the company plans to absorb the GST rate differential to pass on benefits to consumers. In a big relief for Aishwarya Rai Bachchan, the Delhi High Court has ordered protection of her personality rights, barring misuse of her name, photographs, and misuse through AI. Conservative activist and President Trump's close ally Charlie Kirk shot dead at a US university event. The suspected shooter is yet to be arrested. Good evening, you're watching Profit 360 on NDTV Profit and I'm Sanjana. Let's take a look at how the markets fared today. And before that, let me get you some expert market opinion. We spoke to Mihir Vora, CIO, Trust Mutual Fund, to find out his top bets in terms of the themes he is bullish on. Let's take a look.
The portfolios or the strategy, which was very skewed towards the investment phase, the investments theme, compared to 6 months ago or 8 months ago, probably is now a little more balanced towards both consumption as well as the industrials or the investments theme. But having said that, structurally, I would say that if we have to grow at 7 or 8%, we cannot do away with the investments theme. So while the government GST cuts will help consumption in the shorter term, ultimately long-term consumption has to be driven by wealth creation, by job creation, by income levels rising, etc. And that will require a huge, continuing and huge investment in infrastructure, real estate, as well as manufacturing capacities. Because even if we say that there is no impact of tariffs on the services sector, the IT services, outsourcing, etc., they cannot create the 1 crore jobs that we need every year. We have to focus on construction, manufacturing, real estate, and infrastructure.
Meanwhile, the Nifty closed in the green just above the 25,000 mark today after the 7th day of gains. Adani Enterprises and Shriram Finance are the top gainers. Except for Nifty IT and Auto, all sectoral indices closed for the day in the green. Puneet Javeri now wrapping up the day's market action. Puneet, over to you.
Well, thank you for that. So definitely a day where we started off in the green around 30 to 40 points. And while we couldn't, keep up a very strong momentum compared to the last couple of days, we still ended about 25,000, and that was a key positive to say the least. Going forward, we'll have to see if we can maintain this level as a key support, but that will be dependent on a lot of factors, both macro as well as micro as well. As you rightly said, some sectoral gainers were sectors like Nifty Oil and Gas, which were the biggest gainers. For the Nifty specifically, Adani Enterprise did lead the positive momentum today, while something like a Shriram Finance also gave up positive performance today in the trading session. In terms of sectors, as I rightly said, Nifty Oil and Gas emerges as the top sectoral gainers. Gujarat State Petronet, amongst others, were some of the key stocks which had a positive impact on these. We also saw the Nifty Media also being in the green as well. And two sectors that have largely been performing very well for the market, IT as well as auto, were the only two to be in the red today. When you look at the mid cap and the small caps, they have been consistently weaker even when the benchmark indices has shown strength, but today they were both again in slightly with a positive aspect, but flattish to say the least. We are seeing only specific movers in the mid cap and the small cap index, largely based on news flow as well as corporate action getting rewarded by the market as well. Overall, when you look at sectors like consumption, Nifty FMCG also ended positively today, and that's for the third consecutive day. The GST rate cut benefit does fuel positive aspects for the Nifty FMCG. Stocks like Britannia did very well in trade today as well. But overall, we will be going across next week with the Fed rate cut as one of the key positive, and the banking space will come in focus. But for today, that was the oil and gas that had the gains, and for tomorrow, the major talking point will be if we can maintain 25,000 as a closing level for the week.
Right, Puneet, thanks so much for that. Now let's also do a quick currency check. The rupee has settled at a record closing low of 88.44 against the dollar. The Indian currency fell by 36 paise to a record low of 88.46 against the greenback. Now, this is the 34 paise lower compared to what we saw on Wednesday. Moving on, Adani Power has soared over 25% in the last 6 months. But why is this the biggest turnaround story in the making? Hiral now joining in with the complete picture.
It's an interesting move that you're seeing with regards to Adani Power. 25% up move in the last 6 months. Is the tide turning? That's the key question from here on. You know, in fact, it seems like India's biggest turnaround story which is in the making. Let's quickly understand why. Between FY14 to 21, the company actually reported a loss of around little over 12,000 odd crores. But that turnaround has started since FY22, where between FY22 to 25, they've reported a profit of nearly 50,500 odd crores. Now, from here on, if you see in terms of the guidance that the company has given, they're suggesting a bigger story that may still be in the making. If you talk about the guidance as well, an EBITDA of almost around 70,000 odd crores is what they're looking at in 6 years, which is only implying a 25% compounded growth. From there on, if you see the scale of the company, the ambition is staggering because they're looking at capacity expansion, wherein they will be implementing 24 gigawatts of new capacity in the next 6 years. And what this means is it takes the portfolio to nearly 42 gigawatts. That's what we're talking about from here on. The capex is around 2.4 lakh crores for this expansion, and they're assuming a ROCE of nearly around 20 odd %. And on the back of this, the EBIT could actually exceed nearly 50,000 odd crores. In the past 12 months, the company has already achieved orders of around 7.2 gigawatts over the next 12 months. Now, what is the key differentiator for an Adani Power versus the peers? It's mainly the execution, because they have been focusing on faster completion, and that is what is accelerating the break-even and enhancing the project returns. If you see in terms of the timelines as well, Adani Power is completing projects in 3 to 4 years versus NTPC, which is a competitor which takes nearly 6 years in a similar kind of a framework. And they also have a lot of benefits that come in from the integrated ecosystem. What I mean by this is, if you have to look at the sister concerns as well for the likes of Adani Enterprise or Energy, they source coal from Adani Enterprises. There is transmission support coming in from Adani Energy as well, and this ecosystem helps them on the execution front as well, giving them an operational edge over peers. So overall, if you talk about the entire journey, very positive from here on. And in terms of the financials, FY25 EBITDA, 21,600 odd crores. The net debt to EBITDA is around 1.4 times, which is way lower as compared to NTPC as well. And the balance sheet has been pretty much strong, providing ample headroom for funding the expansion plans. Simultaneously, if you talk about NTPC, their FY25 EBITDA is around 54,400 odd crores, and the debt to EBITDA margin, that is 4.6 times. So that clearly tells you that the financials are also pretty much reasonable. So that's the turnaround that we're talking about, and the way the tide has turned for Adani Power.
Thanks so much for that, Hiral. Moving on, sources to NDTV Profit are indicating that SEBI's delay in taking action against Sprite Agro may harm investors. The regulator searched the company's offices in June and reportedly drafted directives after discovering questionable trading activity. But the company's name was never revealed in SEBI's press release, leaving investors in the dark. For more on this, let me quickly go across to my colleague Charu, who's going to give us all of the details. Charu, over to you.
Hi Sanjana. So what happened here was that in the month of June this year, SEBI had conducted raids with regards to entities who were doing pump and dump scams with investors. These raids were conducted in multiple locations, and then it was reported widely in the media that an Ahmedabad-based company is behind a lot of these scams. And NDTV Profit further probed the issue and came out with exclusive reports claiming that over 4,000 investors have been duped in pump and dump related scams by this particular company, and then the name of the company was also further relieved. Now, Now, some other news reports were also done by NDTV Profit in the past, where we mentioned that Sprite Agro is under the SEBI scrutiny with relation to these search and seizures that took place on pump and dump allegations and doubts. And scrutiny continued within the Securities and Exchange Board of India, the market regulator. However, this particular company has now announced by putting out exchange filing on the BSE platform that it is going to have its board meeting on September 18, where they're going to consider a bonus issue of 10:1, that is 10 shares for every 1 share that is owned by an investor, and is also considering 100% dividend payout. Now, this is something huge that is being done by a company whose stock is valued under ₹2 currently and is also under SEBI scrutiny. But since there are no formal channels from the regulators telling that yes, it is under the scrutiny, and the order is not coming out either before this, at least for now, it is sort of keeping the investors in the dark about what are the regulatory risks regarding the company. We have also known from the sources that an interim direction was prepared in the case. However, due to some regulatory hurdles, it has not come out yet.
Thanks, Charu, for that. We'll continue tracking this and bring you all of the latest. Let's move on now. Health insurance will soon feel lighter on your pocket because from September 22nd, premiums are exempt from GST. But many insurers have added conditions. Some will give the benefit only for policies bought after that date, while others are still charging GST till then. My colleague Pallavi is here with all of the details.
Absolutely. And, like you said, one of the big changes and one of the big benefits expected from the GST rationalization was to health and life insurers, the exemption of health and life insurance policies. Now, these measures, like all others, are expected to kick in only from September 22nd. But we can see that several health insurance players have already actually rolled out these policies without charging GST. Now, the second big thing that we should also remember is that there was a lot of debate regarding what the extent of the pass-through will be, but nearly all of these players which have rolled out this pass-through have done it at full 18%. There were some concerns regarding how these players will adjust input tax credit and whether they will be able to pass on the full benefit. So far, from what we have been able to gather, is that they have actually passed on the full benefit. But let's remember, some terms and conditions do in fact apply. It does appear that while these benefits are being passed on, they are actually effective only starting September 22nd. What that means is you can purchase a health insurance policy or renew a health insurance policy and not have to pay the 18% GST that you were earlier paying, but up until September 22nd, you will not have access or you will not be covered by these policies.
Right, Pallavi, thanks so much for clearing that up. Meanwhile, Coca-Cola won't be changing prices for its fizzy drinks despite the GST rejig. Industry sources say Hindustan Coca-Cola will keep the MRP unchanged, even though non-alcoholic carbonated drinks now face a 40% GST rate. Let's go across to my colleague Aishwarya for more details.
Well, what we're picking up from our sources is that Hindustan Coca-Cola Limited, which is one of the bottlers for one of the top brands as far as Coca-Cola, Sprite, etc. is concerned, is planning to retain the prices of these aerated carbonated beverages at the MRP itself. That will be retained is what we're learning from our sources. And now the 40% special GST rate which has been applied to fruit juices categories such as Minute Maid and Maaza, specifically of this brand, and other fruit juices available in the market, those could come under the 40% bracket earlier, which were between the 12 to 18% bracket depending on the category or the kind of fruit juice. And so there could be an expectation of a little bit of a price hike or a price impact. But what Coca-Cola sources are telling us is that Hindustan Coca-Cola will be absorbing these prices as far as the sugary drinks or fruit drinks are concerned. A notification is also likely from the government side as to what defines these sugary drinks as well, and what is the content and ingredients in terms of percentage percentage that needs to be part of the sugary drinks. Coca-Cola, of course, another update that we have is unlikely to change the prices of even Maaza and Minute Maid is what we're learning. They will be absorbing them and retaining the prices at current MRPs. Apart from that, prices of their packaged drinking water, Kinley, is going to be slashed very, very soon in the next couple of weeks ahead of the 22nd September GST rate rejig. Now, just for context, 40% GST will apply to all non-alcoholic beverages according to the GST announcement made by the government, and GST on 20-litre bottles cut from 12% to 5% during this round of GST rate cuts.
Thanks, Aishwarya, for that. Meanwhile, Amazon is betting big on speed. Its 10-minute delivery service called Amazon Now has touched down in Mumbai. Orders in Delhi and Bengaluru actually grew 25% month-on-month, and it comes right ahead of the Great Indian Festival. Let's go across to my colleague Agni Dev to tell us more about this delivery feature. Agni, give us all of the details as Amazon Now makes an entry in Mumbai.
Right, so Amazon Now has formally announced its entry into Mumbai, and remember the timing is all the devil is in the detail, because this is right ahead of the festive season rush that we are expecting from the Indian retail market. Now remember that it will be competing head to head with the likes of Blinkit, Instamart and Zepto, and will be offering the same category of products, which is your everyday essentials, your festive needs, your groceries, everything in 10 minutes. Now Amazon officially says that it has added 100 dark stores. It calls them something else, fulfillment centers, micro fulfillment centers is the name they are using, but essentially they are dark stores. So Amazon has added 100 dark stores across Delhi, Mumbai and Bengaluru, and plans to add hundreds of more by the year end is what they are saying. Then again, remember that this is a battle for the slice of a pie, which is $6 billion in size. The instant delivery market is $6 billion in size in India, and it's expected to grow to $100 billion by 2035 according to Bloomberg Intelligence. And Amazon is capitalizing, and the quick commerce race is expected to heat up, so do expect some competition and some updates from there as the festive season goes ahead.
Thanks so much for that. Everyone is in fact gearing up for the festive season. And with that, what does the discount trend in quick commerce and e-commerce look like? Will you save more money, or will your pockets feel lighter this festive season? Mahima is here with all of the complete research. Mahima, over to you.
You know, it's interesting because the discounting game is really picking up and the competition has been intense so far. I'll take you through how category-wise discounting is different and product-wise as well. Now, in terms of category-wise, the highest discounting has been seen in personal care, followed by packaged food, then basic staples, home care, beverages and dairy. In terms of where highest discount, which platform is overall given? Well, DMart Ready still steals the show. Of course, it has the e-commerce structure rather than the quick commerce structure with 23%. Amazon Now also competing with DMart Ready, a new entrant comparatively at 23%. But Amazon Now right now only has presence in Bangalore. Followed by Zepto, Super Saver and JioMart at 21%, Flipkart Minutes at 20%, Instamart Max Saver at 17%, Blinkit, Zepto and Instamart, you know, removing their max saver features at 15% only. Now, in terms of the overall discounting trends so far in the past few years and quarters, at somewhere in October 2022, the average discounting was at 7%, which grew to 11% in October 2024. Now it is as high as 17% as last observed in September 2025. Now, with regards to who is leading the assortment race, which means that which particular platform has better products to offer and more products to offer, where Blinkit assortment wise tops the race amongst the entire quick commerce players. Instamart largely in line with where Blinkit stands, but Flipkart Minutes had lesser assortment as compared to these two, but they've improved since July 25 with only 4 items which are available, which are now unavailable versus 7 to 8 items earlier. And DMart Ready and JioMart on the other hand need to improve in their premium category segment. In terms of the D2C brands versus non-D2C brands, this is an interesting one because D2C brands is 2.5 times more expensive than a non-D2C brands on these quick commerce platforms. For example, if you try to compare milk, for example, a D2C brand like Sid's Farm that costs 42 rupees versus that of Amul, which costs only 33 rupees. Something like a peanut butter at 320 of Whole Truth versus 150 of Sundrop. And similarly, that trend is observed in razor and shampoo as well. Now, in terms of the overall snapshot of where should you actually go ahead and buy your groceries from in this festive season, this will give you a picture. This is an example of how probably your bill will look like if you go ahead and buy groceries on each of these platforms. And the lowest right now is on Amazon now, but again, here the caveat is that it is only present in Bangalore right now, followed by DMart, which is at around 1300 for the products that we have chosen, and followed by then something like a Zepto, which is at around 1550 for the products, for the 5 to 6 products that we have chosen. Then we have something like Blinkit and then Instamart. All of these, of course, removing the entire Max Saver into picture. So as of now, if you are going ahead and planning to buy groceries in bulk, you can consider DMart Ready, or if you're in Bangalore, then Amazon Now, and then followed by something like a Zepto, Blinkit and Instamart.
And let's also get you some views on the GST impact expected by the big players of the auto industry. My colleague Danish caught up with the top brass from Maruti and Hyundai. Listen in to their take on rural and urban demand and the pressure from leftover inventory.
One of the reasons why the small car sales is going down is because of the some safety and emission regulation is becoming almost par to the European level, which means the production cost went up. But thanks to this GST reduction, almost that amount of increase of safety and emission, the cost up is now coming down once again. So car is becoming more affordable for the entry level users. So I think entry car will revive once again.
Last few years, in fact, rural markets were the growth engine. For Hyundai also, the rural penetration moved up from 19% to 23% in terms of our contribution to total sales. Now I feel with the GST cut, even urban markets will join the party, because the sentiment in the urban markets, because of the geopolitical situation and all those wars going on, and of course because the supply chain, everything was disturbed. But now I think this is a good impetus. The other thing which will come in is because now customers will be really be able to upgrade, because the money which they can spend remains the same, but in the same money they can get a higher end car. So I think this will be a big change which will happen. So at the bottom end of the spectrum, the car penetration is about 34 per thousand, which will go up. But more importantly, in the less than 10 lakh rupees segment, I think the SUVs could see a very big jump.
Meanwhile, Delhi High Court has given Aishwarya Rai Bachchan a big win. The court has ordered websites, companies and others to stop using her name, photograph or identity without her permission. The order also covers AI-generated and morphed images. Let's go across to NDTV's Nupur Dogra for more on this.
In a big relief to Bollywood actress Aishwarya Rai, the Delhi High Court has today granted an interim injunction, that is an interim bar on several websites, online websites and YouTube channels from using her images and videos unauthorized without her consent. The High Court observed that such use of a personality like Aishwarya Rai that has endorsed several top brands leads to infringement of her right to privacy as well as right to life. The Delhi High Court, while granting this relief to Aishwarya Rai Bachchan, has today made several strong observations as has now barred several websites who were in fact misusing or using her pictures without her consent. Remember, the actress had approached the High Court against several websites, claiming that several websites are using AI-generated content or her images in fact on T-shirts to sell products without her consent. So this comes as a big relief to the the Bollywood actress that as an interim order, the Delhi High Court has for now directed all these websites and YouTube channels who were using her images and videos without her consent to take down these links within 72 hours. So this, in fact, is a big relief to Aishwarya Rai Bachchan. Remember, Abhishek Bachchan has also moved a similar petition before the Delhi High Court just yesterday, and a similar order is expected on his petition as well. So this comes as a big relief to Aishwarya Bachchan for now, and it will be important to see whether High Court comes to a similar conclusion in Abhishek Bachchan's case.
Thanks for that, Nupur. And let's move on to what's happening in Nepal now. The country remains under restrictive order after the protests. This is when the army ordered people to stay home after the military came out in force overnight to halt the deadly unrest in Kathmandu. Today, some areas are under curfew while some have opened under the control of the army. Now, armies of both India and Nepal are allowing citizens to enter respective countries, and NDTV's Ranveer Singh sent this report from the Indo-Nepal border in UP.
After the Gen Z protest in Nepal, the situation at the Indo-Nepal border is tense, but the situation is under control. And if we talk about my present situation, I am standing in Rupaidiha on the no man's land, and this Rupaidiha border is situated in Bahraj district of UP, and you can see this is the entry gate of Nepal, and the Nepal government has given permission to those Nepali nationals who are residing in India. They can enter Nepal by showing their identity card. And if we talk about India, India is also permitting those Indians who are residing in Nepal or those who are stuck in Nepal, they can enter India by showing their I cards. So there's no vehicle movement, no vehicular movement is allowed by either both the government, but the security in Nepal side, Nepal Army and Nepal's APF, it means Armed Police Force, they are deployed at the borders, and there is two-layer security barricade. You can see two-layer security barricade at the border. So only those who have valid identity card can enter another nation if they are national of that particular country. So if we talk about Indian side, I'll show you SSB as well as UP police. Both are deployed on the borders, and SSB is checking each and everyone who is coming from Nepal, and if they are showing their valid I card, then they are allowed to enter India.
And that's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
Hello and welcome. You're watching KYC. I'm Harsh Saita, and today we're going to be talking on a lender in the small finance bank space. And it's an interesting play because you've got a decent amount of growth. Credit costs are not that high for this one, and it doesn't have any direct exposure to microfinance, and that's why this one kind of stood out for me. Let's pull up what I want to know first on Capital Small Finance Bank. It's a recent listing, of course, but outside of that, you're looking at them having exposure in the NBFCs and MFI segment, but indirect exposure, not direct exposure. And in terms of the credit cost, at 0.4%, which is their credit cost in Q1 FY26, it doesn't look too elevated or too bad. And out of that, half of the credit cost is emanating from here, and there could be a possible positive surprise to that number because you will start to likely see recoveries come through. And I'd want to get a sense. I'm not sure how much of a sense we'll get, but it will be an important metric. And frankly, that credit cost number of sub 0.5% for a small finance bank is what really attracted me to this one. So we'll get more details on the sustainability of that as well. Though some of those thoughts will also be important. Now let's talk about the agri book in particular. Now, agri loan book growth and overall loan book growth is going to be very, very crucial going forward because agri is the largest part of their book. That's one. Second is the book size is not too large. So you're seeing a relatively smaller size, sub 7,500 crore kind of size bank with a very strong possibility of growth. And that's what really also stands out for me. So some color around growth. One piece which has been a bit of a concern, they've guided for growth of 20%, but they've not achieved it, especially in FY25. So that's why this metric is important for me, to try and understand whether they can clock that kind of growth. The third piece is with regard to geographic concentration. They're concentrated in a Punjab and a Haryana. Now they've guided that they will diversify. They'll probably diversify into a new state, and that will also be a new growth lever. But along with it comes its set of risks. So what are they doing with regard to geographic concentration? And this, to me, is one of the largest risks that this bank faces, because they have a good pulse on Punjab, Haryana. But what outside of that? And they're present in 5 states outside of that as well. But it's a very, very tight geography that they operate in. Fourth lever, of course, is deposit growth, and that hasn't impressed me as much. So what are they doing in order to try and go in and build a liability franchise? What are the geographies they're looking at, and what are the measures that they are taking? Margin stability, can it sustain? It's been fairly stable and robust. The question, of course, will always be on whether it can sustain or not. And the liability franchise will, to some extent, also drive the kind of margins that you will likely see in terms of comfort. Now let me talk about loan mix and credit cost expectations. In terms of the loan mix itself, I'd want to know if that might change given a change in state, and whether this 0.4% kind of credit cost number that we're seeing is something that can be controlled and contained to that extent. Last piece, of course, will be the NPA ratios, and the NPA ratios have been in that band of 2.5% plus on the gross side, and on the net side as well, they've missed some of their estimates, and they've given reasons which would suggest that they're trying to calibrate ROA to ensure that the ROA sustenance remains. But at the same time, it's very, very important to also understand where the NPA ratios lie on a steady state basis. Can they improve along with that steady state ROA? So all of those is what we will try to get to. NPA ratio is nothing, the net NPA ratio is nothing, but it's the provision you make on the bad loans that you have, and what is the residual loan balance of bad loans that you still have post the provisioning. So that kind of explains it, and ROA is obviously the metric of profitability where banks are concerned. Now let's talk about the bank itself, and it's India's one of the first small finance banks of India. It was founded in 1999, got a small finance bank license in 2016, It's got a strong presence in Punjab and is expanding across northern India. It generally focuses on secured loans, and India's middle income segment is what it focuses on. Nearly all the loans are secured. There's very low bad loans per se, and it's retail deposit focused. It has a decent CASA as well. So broadly, that's how it plays out. That's the sum and substance. Let's talk about the background. It was founded by Mr. Sarvjit Singh Samra and some of his associates, colleagues. Started as a local area bank in Jalandhar, Punjab in 1999. Thereafter expanded 47 branches to 195 branches. Now operates out of 5 states and 2 union territories. And it's built by, of course, a core founding team, as is evident. And of course, the MD CEO continues to be Mr. Samra. How is it built? Well, it's focused on middle income, rural, semi-rural customers, and it does secured lending. It also listed on exchanges in February of 2024, where they did a capital raise through an IPO. And of course, that is something that we need to also highlight. Let's talk about products, and around 7,500 crore being the book size, but agri loans is the largest chunk, 30%. It's crop, farm equipment and Kisan credit cards. That's how agri loans is built. On the mortgage loan side, as would be understood, it's regular home loans and loans against property. 27% is the mix where mortgage loans is concerned. Then there is MSME loans, which is working capital, business, project finance for SMEs. That also is something that they lend to. Around 22% of the loan book goes there. You have around 14% loan book sitting in corporate, which is NBFCs and microfinance. Now, this is an indirect set of loans that they've given. So it's not a direct microfinance lending. It's 2 microfinance lenders who have onward lent. Now, the problem could happen if the microfinance lenders default, which is NBFCs actually default on the loans given by Capital Small Finance Bank. But this, again, in terms of book size, is just 14% of the total book size. So when you're talking about 14%, it's probably 1,000 crore odd in terms of book size out of the 7,500 crore of loan, total cumulative loan book that they have. Now let's talk about consumer and other loans. Around 7% is that, personal, auto, gold and loan against deposits. So that's how it really stacks up in terms of in terms of where it lends to. Now let's talk about the metrics, as we always do. We'll start off with the income statement, the balance sheet. We won't have the cash flow, as is evident for lenders, but operational metrics and asset quality is what we will focus on. Thereafter, we will look at shareholding, street cred, street coverage, and we will look at valuations. Excuse me, and we'll sum it up with all of those 8, and we will speak with the management and get better clarity on what they expect on this one. So let me start off with the income statement, and it's a decent looking income statement. You're looking at 70% growth on the net interest income front. Operating profit has also grown by around the same similar kind of region. We're looking at provisioning, which hasn't really spiked in any significant fashion. So you're seeing very low CAGR there, and that's what's aiding profitability. 25% plus profit growth. There's no concern per se here to talk about, and therefore we've given this a thumbs up. And as you would also see, really no complaints. But let's talk about the balance sheet. Now, in terms of the size, it's at around 7,200 crore at the end of FY25. What you would want from a small finance bank, which is sub 5,000 crore, say at the end of FY22, would be to grow fast, right? But that's not happened. They've grown just about at 15%. Some of its peers obviously grow much faster than that, and there are some peers which don't, but a predominant set of peers would typically have grown faster than that. And that's where this one really stands out, that kind of alpha in terms of growth isn't getting delivered and isn't visible. And that is also visible in the deposits. And the credit to deposit ratio is quite healthy in that sense. So that's the other piece which really stands out for me. Around 3,080 odd crore in CASA, around 25%. So the CASA ratio is actually inched up. And the capital adequacy also is fairly decent at around 25% post this equity raise that they've done. So that should give you a good runway of growth and less equity dilution, hopefully, if the asset quality remains quite sustained and controlled. So those are some of the aspects that you'd want to look out for. CASA growth of 7%, well, not really impressive, but it's also been a tough growth environment. But 11% deposit growth on an 8,000 crore base, am I impressed? Well, maybe not entirely. And advances growth of just about 15% on a book size of 7,000 crore, well, again, not exactly impressed. But if some of those numbers could change, that's when you could start to see some alpha play out all of a sudden as a result of that. So again, something to bear in mind where Capital Small Finance Bank and the balance sheet is concerned, that you might well see, if at all, that there is solid growth, that these numbers would change. So you want to keep your eye out on that one. Now let's talk about the operational metrics. And when you're looking at the yields, they've been fairly stable across the board. You've also got cost of deposits. Let's pull those up. You've seen an inch up with regard to cost of deposits. But when you're looking at margins, you're seeing a fair bit of stability where the margins is concerned. So the cost of deposits also, the inch up hasn't been as sharp, and therefore they've been able to somewhere control the margin levers that they have seem to be quite reasonable, because you look at that margin number, 3.8 to 4.2 is not a very bad band to be in terms of margin. Sometimes in tough margin environments, you see some of these smaller banks really slip badly, which doesn't seem to happen where a Capital Small Finance Bank last 5-year record is concerned. Now let's talk about the cost to income ratio. This has remained extremely elevated, 60% plus. So this is where you're seeing some bit of weight when it comes to profitability. And when you're seeing your ROAs, you've seen them largely bunched up between 1 to 1.4%. This is on average assets. And if you're looking at the average advances that they've disbursed, then it's a 1.6 to 2.1%, which is quite decent, which is not bad at all when you're looking at it in the overall scheme of things. Because on the advances book, you've got around a 2% ROA. But of course, on the AUM as a whole, you might have a lower, more compressed ROA number. So can that expand? Is there a lever for expansion? And how can we expect that, or how can we expect profitability to rise, is something that you would want to keep your eye out on. This 25% growth that they've seen over the last few years, is that sustainable, is the other piece. Now let me talk about asset quality. And when you're looking at the NPA ratios, and we'll quickly pull them up, you largely see them between the gross NPAs between 2.5 and 2.8. The stability is what I give them a thumbs up for. It's very, very stable. The net NPA number also between 1.3 and 1.4. So it's a very tight band in which they operate, both on the gross and the net NPA. The aspiration is to bring down the net NPA to 1% or maybe even below that. But I believe that could take some bit of time, because they're calibrating ROA, as I did mention, because of these ratios. Let's talk about shareholding pattern. 19% promoter owned, fairly no big changes, because since listing, it's not been too long since listing, and therefore don't see that as something that will change. FI ownership has been rather steady. The DI ownership too has been rather steady. No concerns with regard to shareholding, only that it's below 20% from a promoter perspective, and therefore we've given this a neutral. No other concerns per se from a shareholding perspective. So again, something you want to keep in your mind. When you're looking at street cred, you look at the 1 month returns, the 6 month returns, the 1 year returns, it's been fairly flat. Nothing much in terms of major moves. Since the IPO, the stock is down 37%. And since listing, it is down 31%. So what you could well start to see is that where stock returns are concerned, it's not been very good for investors. And that's why I've given this a thumbs down. But for investors considering a possible study of the bank, you also want to know that it's not given any returns to investors, and therefore maybe you want to go back to first principles, understand, and try and figure out as to whether there could be a positive upside here going forward. Now, in terms of the street view, well, you've hardly got 2 analysts with a buy rating. 29% return potential, but because there are only 2 analysts, we've given this a neutral, just from a conservativeness standpoint. And let's look at the valuations. The valuations don't look expensive at this point. We've repeated this a couple of times. We've done a couple of pieces with regard to small finance bank if you've been tracking NDTV Profit. And what you're seeing in terms of valuations is not very expensive either. So you've got a decent price to book that it's trading at, which is just about sub 1 time trailing 12 months. And you've got some of the peers trading in around it. So it's not exactly very, very cheap, but doesn't look very, very expensive either compared to peers. Of course, that's the key. Now let's stack up the ratings, and you've got the income statement, the balance sheet. We've given a neutral because of growth. Operational metrics, a thumbs up. We've given asset quality, again a neutral. Shareholding, neutral. Street cred is the one piece where we've given it a thumbs down. Of course, it's not in the management's hands, but post listing, it's really done nothing. Street coverage is a neutral, and valuations is also a neutral, given the way all of the small finance banks are currently placed on a price to book basis, giving it a final rating of 4.5 on 8. Now let me go across. We have Manish Jain, Executive Director at Capital Small Finance Bank, joining us. Sir, it's great having you. I want to first talk about the Q1 numbers, and as part of the Q1 numbers, NBFCs which have lent to MFIs have faced some heat. Do you expect that to reverse in Q2 for you also? And you've obviously, the credit cost number is just 0.2% for you, but I'm just trying to understand how quickly does that unwind, because that will mean that your credit cost is virtually one of the best in the industry. So does that unwind in Q2, you suppose, or we'll have to wait for Q3? And what will the Q2 larger, what's the larger picture looking like in Q2?
First of all, good morning, and thanks for me for the show.
Thank you.
As far as NBFC MFI pie is concerned, statistically, NBFC MFI pie is constituting less than 1% of our portfolio. We have 14% portfolio to the NBFCs, and out of this, MFI pie is less than 1%. So we have almost insignificant pie, and within this pie, we are typically more than 55% is A plus rated NBFC MFI. So with that thing in sight, we are not presently seeing any negative surprise coming ahead in the period to come. Yes, we have seen one of the slippage, some slippage in the Q1, but Q2 from that standpoint, or I will say from the going forward also, we are not looking forward for any negative surprise. Just positive surprises may come on this side. So that is regarding this particular pie is concerned. And regarding our philosophy, we being a retail-centric, middle-income group-centric entity and a secured franchise. And that is the same philosophy we follow when we do the corporate lending. In the NBFC, we will typically lend to those NBFC who are lending to the secured pie of the customer. So which is giving us better comfort and lesser volatility on the asset quality side as you move forward, including the present scenarios.
Got it. Understood. So what about the rest of the book? I'm just trying to understand what helps you keep the credit cost so low. Not seen it much across the industry. And would the NPA numbers have any role to play in that? In the sense, are you more comfortable with keeping the gross NPA at maybe 2.8 and the net NPA also closer to 1.5? Is there a reason for that, a rationale for that? Give us that perspective.
Typically, before that, I just like to clarify a couple of things. We as an SFB have identified a niche of the middle income group customer segment as our target. If you look into our ATS of the asset, this being around 60 lakhs. Secondly, we are a secured lender with 99% plus of our book being a secured. And with 80% plus of our book, we have a collateral in the shape of the immovable property or the bank FDR of the value of amount more than the loan. So, and we are a production lender. Over 80 to 85% plus book is lending to the customer which generate cash flow for them. So these are the basic 3 principles on which we typically lend to. So with these 3 principles in lend and our asset composition look like we have 30% agriculture, we have 27% mortgage, we have 22% MSME. And being a secured franchise,
But sir, apologies, I'm interrupting. But sir, there are a lot of lenders who do that. You know, we've heard arguments from several lenders which say that we are very, very cash flow linked. But they're all seeing pain in their books. So I'm trying to understand, what is it that helps you stand out? What's the formula?
So typically, as I said, we typically a cash flow based lender. The slippage ratio, being a retail franchise, is always remain there. Our gross slippage ratio historically remain in the range of 1.5% to 2.25%. But our strength lies in minimizing the net slippage. If you look into any of the year, you will find the upgrade versus recovery from the existing NPAs are almost nearer to the gross slippage. So which is helping us in keeping the gross NPA in control. If statistically, you rightly said, our GNPA remain in the tight range of 2.4% to 2.75% range. And we intend to bring it down to 2.2 to 2.3% as we move forward. Our net NPA, which remain in the range of 1.2 to 1.35 or 1.4%, we intend to bring it down as in a medium term basis to around 1%. And we are typically, if you look into historically, a few more important points. Historically, we have around 0% write-off, and we have not we have not sold the NPA with the haircuts to at any point of time. So typically, the number which we're talking is purely recovery effort based, rather than after exercising some balance sheet cleansing activity. So which is giving us a comfort. This being a secured franchise, having an immovable property of the value more than amount of loan, there may be a time gap available, but typically we are able to recover what we lent. So that's the reason we're comforting for the credit cost side.
Understood. What brings down the NPA ratio, sir? What is the lever that you have? Is it going to be recoveries? Is it going to be growth? What's it going to be?
It will be the combination of recovery and the growth.
Understood. So, and what's the growth direction going to be like? You've guided 20% in FY25. You fell a little bit short. So just trying to understand what's the certainty of that 20% plus kind of growth in an environment where growth has anyway come off. So give us that perspective.
Last year, yes, we were targeting 20% growth in the beginning of the year, but industry segment perspective, the growth has sharply pulled down. But despite that fact, we are able to grow typically 1.7x of the industry growth in the last fiscal. Current year, again, we are targeting to grow. Now we are targeting, and we are rather more confident of growing the balance sheet for the current fiscal of 20% plus, and intending to improve our growth rate as we move forward. Given we being a MIG guy, we believe the opportunity available in the MIG segment, which is both in the count and the ATS number, average ticket size, there is significant available. And the type of the segment we are there in and the product we are in, we see a good momentum picking up. And that's the reason which gives us a confidence, further confidence, that we intend to grow 20% in FY26 and continue to enhance our growth rate as we move forward on the advance side.
Is there a target, sir, in terms of ROA? Because your ROA, again, has been one of those numbers which have been very, very steady. So I'm trying to understand, is there a target here? And as you scale, does this also go up? Because your cost to income remains elevated. I'm trying to understand, for how long do you do that OPEX? For how long does it remain elevated? You're a relatively small bank. Is that something that we can expect to remain steady state for a long period of time? And therefore, what's the ROA number?
We are, as you rightly said, we are continuously improving a ROA, which is 1.4 in FY25. The same was 0.9 in FY22. So for each of the fiscal from FY22 to 25, we continuously increase the ROA. We intend to maintain the ROA around the same level for the coming 3 quarters for the current fiscal, given the sharp interest rate reduction and the consequent impact on the margin which may come. But medium term basis, we see a constant and continuous expansion in the ROTA. So there are multiple levers available in the present balance sheet. One lever.
So despite this pressure, ROA won't fall, sir? Is that the right? Am I hearing it right?
Yes, we are intending to maintain the ROA for the next 3 quarters jointly. That is what we are targeting.
At what? At 1.4%, sir? Is that
around 1.4% levels? Plus minus 0.5%.
So you should exit FY26 at around anything between 1.3 to 1.4. Is that?
Yes.
Is that
yes.
okay? Okay.
Yes.
Understood. Fair point, sir. Got it. Sir, last off, just trying to understand, what are you doing in terms of deposit growth? Because that number was has been just about 11% last 3-year CAGR. Is that a concern for you at all? Because you're a relatively smaller bank. So just trying to understand what are you doing about that?
If we look into the deposit side, June period, we grow year-on-year basis by 18%. Last year, we were anticipating a sharper interest rate cuts. So we were calibrated over deposit growth. In Q1, after the 2 rate cuts has come, we have put a paddle on the deposit, and Q1, we grow the deposit by 9.5%, quarter-on-quarter basis. And effectively, year-on-year June, we are 18% plus deposit growth for the organization as a whole. And we continue to be retail-centric. Historically, we are 90% plus retail-centric deposit, with a cost of deposit of sub-6, with a CASA of 35% plus historically. So I will say we are having a lot of levers available on the deposit side, and given a lower CD ratio, over average CD ratio typically remains around 80 to 82%. So we have calibrated the deposit growth to support the advance growth. So, but we believe we have strong capabilities given our history and given our strength of being a middle income group customer centric. And purely ATS of our saving is 43. ASF of deposit is around 10 lakhs. So with that granularity in approach, which is giving us a higher confidence to continue to grow deposit to support the growth which we need on the advance side.
Okay, sir, thank you so much. You've come in, you've given us quite a bit in terms of food for thought, and thank you for coming in and candidly answering all those questions. And folks, that's all actually from us here from the KYC team. And KYC, of course, only on NDTV Profit. And we hope that you too found this profitable because it's for your profit. Thank you so much for joining.
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. Often on this program, we try to speak to the people that manage your money so that you get a sense of how they see things, how they see, one, economic growth, how they see earnings in the corporate landscape and the companies that they invest in, and what their expectation is going forward. And joining me today is Harish Krishnan, who's the co-CIO and head equity at Aditya Birla Sun Life AMC. He manages quite a few of their schemes, including not least of which the Flexi Cap Fund which quite a few of you will be familiar with. Harish, thanks so much for taking the time. Pleasure speaking with you. Let me start by asking you to set the context for us. How are you seeing things amidst all of this swirling uncertainty on tariffs and everything apart from that? How do you as a fund manager deal with all of this disparate information?
Right. Nice to be on your show, Alex. So clearly, we at Aditya Birla Sun Life focus more on the medium term rather than necessarily focusing on the news for the day. And while today now seems to be a moment where there is a plethora of news, be it in terms of tariffs, be it in terms of GST cuts, etc., ultimately markets are slaves of earnings. And what we want to kind of get a sense of is where earnings are headed, say over the medium-term perspective. Now, let me give you some thoughts as to how we think about earnings of corporate India in aggregate are likely to shape up. Over the course of the last 25 odd years, when we look at corporate earnings of India Inc., which is listed, we generally see them doubling anywhere between about 5 to 6 years. Now, this is the averages. Now, as many of you may be aware on your show, averages can be misleading because there are both a very short span of time where earnings can double, like in the case of during COVID, wherein we saw that earnings doubled in about 2.5 years, where a huge amount of things came together to make that happen. And there are also time frames like what we saw in 2010 to 2019, wherein earnings took about 8-9 years to double. So this 5 to 6 years is the average of all of those doubling times. Now, like I said, what we saw immediately after COVID was a combination of multiple things to kind of come together so that earnings doubled in about 2.5 years, which is unlikely to repeat. But we do think that, over the course of the next 5 to 6 years, earnings of corporate India are likely to double, which is primarily predicated on the fact that the raw material for earnings growth is CAPEX. And CAPEX, we have started seeing that starting to emerge through. Again, it's not something like, it's a dramatic kind of a shift, etc. But this is how, the gears do change. From the neutral gear, they move to the first gear and then to the second gear. And, when it starts going really fast in the third and fourth gear is when it starts making the newspaper headlines. At this point of time, we think that CAPEX is more in the first and slightly moving to the second gear. And that gives us confidence that as and when this corporate CAPEX continues, we're likely to see that earnings growth. Of course, there needs to be an enabling environment. And that enabling environment is coming courtesy, very strong balance sheets of corporate India, very strong balance sheets of the banking system, as well as all of these things, be that of the GST cuts, be that RBI has cut interest rates, be that of the tax savings that the government has allowed, as announced in the budget. All of these things together is likely to shape up demand to encourage this further CAPEX build out coming through. So therefore, we think that from a medium-term perspective, we continue to remain positive on Indian equities, continuing on their wealth journey per se.
Okay, but we're speaking in September at a time when earnings has not really been blockbuster, of course, and nobody expected it to be, Harish. But it's a little harder to stomach when you had multiple years of fantastic growth, and so therefore you're spoilt by a kind of a run rate that you got used to. And it's hard, therefore, to come to terms with a year of consolidation, which a lot of people are calling it. When do you think that you can break out of this funk? As you pointed out, private CAPEX maybe in gear 1, gear 2. When do you anticipate that it can accelerate further?
Sure. No, I think it's a very telling point, especially after 3 consecutive quarters wherein we have had, say, mid-single-digit earnings growth. So our base case is that all of these cuts of GST, tax cuts, as well as the RBI-induced policy rate cuts, all of that should lead to an improvement in demand sequentially going forward. And therefore, by the end of this fiscal, our sense is that we are likely to get into the double-digit territory. Again, it's not going to be something which is the third year or the fourth year kind of a screaming earnings growth rates that many people have got used to amidst 2022 to 24, wherein, like we discussed, we were spoiled for choice. But it would still be a step up from the current 5-6% growth rates that we've kind of seen over the course of the last 3 or 4 quarters. So that is point number one. Secondly, we think that this double-digit growth rate has got further room to improve as we go on to FY27 to go more closer to that 12 to 13, 14% kind of a run rate. Again, is it going to set the pulse racing with those kind of numbers is what really our job is, which is that there are pockets of growth which can be faster than that number at the headline number, and that is where we would want to kind of invest in, provided valuations offer some amount of margin of safety.
Okay, let's delve a little deeper in your own portfolio construction, and here I'm specifically talking about the FlexiCap fund. And I know that you're also looking very closely at the other schemes, but then because it's a blank canvas kind of a scheme, it should give me a sense of how you're looking at your investment philosophy as well. I was looking at the last disclosure, and I see that you have a pretty substantial allocation towards the large banks and financials, right? What is the thinking there? Do you anticipate that that is going to be one leg of growth that will kick in? Ultimately, corporates have not been borrowing for capex. So when that shift happens, do you see corporate lending take in charge, or do you anticipate that the consumption boom that everybody is predicting because of the multiple levers that have been utilized will come through and retail lending will take charge?
Sure. So I think, as far as large banks is concerned, our thesis is as follows: that the size of India's GDP, which is anywhere between $4 and beyond $1 trillion, which is likely to double over the course of the near foreseeable, say 7 to 10 years, we should be having a lot more of lending activity and financial activity for sure. Now, as we speak today, we the regulatory dispensation over the course of the last few years has made backing extremely regulated, which means that say about 5 or 7 years back, there were many promoters and entrepreneurs who wanted a banking license. Today it appears that nobody really is clamoring for a banking license, and it's the same set of companies which are there. Secondly, access to capital. If you were to look at it, barring the top 4 or 5 private sector banks, almost all other banks are, just about at book value or trading below book value. Which means that access to capital, which is a key raw material, is available in plenty for the larger franchises and not necessarily for bottom of the round, which presumably means that the potential to take away market share is far higher in that kind of a growing economy. So that really is a bedrock of why we think that the larger banks are likely to benefit. Yes, there is the here and now as well, which is that we are going through a slowish or a sluggish credit growth. We are also starting to see an inch up in asset quality, and we are also likely to see net interest margins come off, as RBI continues with its rate cut, presumably under such rate cut going ahead. But those are the here and now, which are definitely headwinds for the overall banking system. But just like when banks were making a lot of money in 22 and 23, when credit growth was very strong, when asset quality was supremely good, and when NIMs were at record highs, and their stocks didn't necessarily participate in that euphoria, we think now that the downgrade or the poor earnings run rate that can come through is something that the market is willing to possibly look over, especially over the course of the next 6-12 months. Because as you rightly said, all of these rate cuts, these consumption boost will all likely improve the overall lending profile and the longer term growth runway for the banking system. So that really is our thesis of the overall banking space.
Okay, so that's banking. But then the other leg that a lot of people are betting on, as I pointed out, or in the previous question itself, I was referring to it, Harish, was consumption, right? And we've seen quite a lot of activity in anticipation of the GST announcement. It came through in rapid fire time. What do you think about when that will start playing out on the ground, though? 22nd is when the applicability comes through. But on the ground, when do you see that movement?
Sure. Clearly, consumption habits are very difficult to call out. Exactly what is it that is going to catalyze all of it is only a hypothesis at best. And there has been a lot of focus from the government to get this going. So if we take a step back, from 2018 till 2023, the focal point of the government was primarily supply side reforms, which was giving PLI incentives, which was giving corporate tax breaks, etc., or focusing on logistics, overall infra creation, etc. I think in 2025, the budget that came through and then followed by the RBI cuts and now the GST cuts in very quick succession, there's been a pivot as far as the government focal point is concerned, which is to get the demand side equation right. And therefore, I think with such a big shift that has happened, it is, to my mind, quite inevitable that consumption starts coming back. Again, it is not to say that, there aren't pockets of consumption even today. Look at quick commerce, look at apparel, fast apparel. There are enough avenues to suggest that consumption is not completely over and out. But yes, on an aggregate, those are far and few. I think the idea is to mainstream consumption across categories, which is where this tax cut of GST can be a very big positive. And therefore, I would expect that starting in this festive season and possibly beyond, we should start seeing this engine starting to rev up. Again, going back to the gear analogy, it is getting back into the first and second gear. All the newspaper headlines will start screaming only in the third and the fourth gear. So that's still some time away.
But then from the perspective of the investor, you should be getting in at gear 1 and gear 2 so that you can enjoy the pace that you will see later. But that brings us to the conclusion of this conversation, Harish, which is that I started with a question on the fact that it's hard to stomach a year of consolidation, but it also helps to get perspective and to set those expectations, right? So from your perspective as a message to your unit holders, what would you say should be the expectation in FY26 and beyond in equities, in not the necessarily 5 to 10 year horizon, because let's face it, people look more near term, but FY26 and heading into FY27?
I think that, after a very strong run up that we've seen in 22 to 24, one should be waiting out for consolidated returns. I think positive returns in 26 and 27 is what I could think of would be my base case. Now, will it be something that is going to be substantially higher? Possibly not. But can we be getting at that early double digits or low single digit kind of returns for the next 12, 18 months? I think it is quite possible. Beyond which is when I would think that a lot of whatever we spoke about, the fact that the demand side stimulus will come into place in full being. You also have the private capex in tandem because of that improving capacity utilization start coming through. And that is where that virtuous cycle or the flywheel comes through, wherein supply also gets created, and therefore that brings in that overall vibrancy in the overall market. So I would say that one should be prepared to grind it out over the course of the next 6, 12, 18 months, which is not a bad outcome if you have a long-term horizon, that is.
All right, and that allows you to accumulate a lot more units than you otherwise would be able to. Thanks so much, Harish, for taking the time. Pleasure speaking with you. All right, one of the big talking points in the financial space on account of this GST rate rationalization and the massive reform that has been undertaken by the government is the implication for the insurance space. And of course, term insurance and health insurance premia move from 18% to 0% GST. The question is, how does it affect you? If you have existing policies, does that mean that you will have to pay less going forward? And should you hold off on your purchases to wait for the new rates to kick in? I'm joined by Amit Chhabra, who is CBO at PolicyBazaar.com. Amit, thanks so much for taking the time. Let me get that first question out of the way. What is the kind of reduction that people are anticipating? Because, and I'm asking this because it's not necessarily that simple 18 percentage point reduction. There's also the factor of input tax credit which goes away. And so to that extent, the reduction may not be as much as anticipated, even though companies have said that the implications for them is going to be very material. So they might actually just absorb that hit. What, according to you, will the reduction be?
See, according to me, immediately there's a flat 18% discount on health insurance and life insurance, right? So there's no debate on that. That is going to happen right away as we speak. Post, I think, as probably a few months, etc. pass, the situation will emerge out. If you ask for my personal, feel about this, see, what's going to happen is there's going to be a massive change in awareness. So many people talking about health insurance and life insurance. Imagine, essentially what has happened is the government has come out and said that health insurance and life insurance are almost mandatory products, which is why they have removed GST on them. So I feel that in the days to come, the awareness is going to significantly increase. Hence, more and more people will buy health insurance and life insurance. And I think there is a bit of economic impact on the insurance companies. If you look at it purely financially, you may feel that they will increase prices to match up for it. But we have a feeling that because of the increased awareness, the penetration will increase, more people will buy health insurance, and eventually what's going to happen is that there actually might not be a price increase as well. What happens, remains to be seen. The story will emerge over time. But we are very optimistic that the increased demand may actually more than compensate for the economic impact that is there on insurance companies. So actually there may not be any impact at all.
For the customer as well, there is going to be therefore the most important point from the perspective of my viewer, Amit, is that their policies are going to get cheaper. But let's spell that out, right? Who benefits? Only new customers, or do existing customers also benefit?
Oh, everybody benefits. So every payment that you're making after 22nd of September, that will not attract GST. That is one. In fact, the insurance companies across the board have quickly innovated, and actually even today you can now buy policies at 0 GST. The only thing is the policy will start from 22nd September. So right away, these options are available to customers to pay without GST and get insurance policies. Even if you have a renewal coming up, let's say in the future, that will also not attract GST. If you have bought a policy on EMIs, which means, let's say you've paid 2 months premium to the insurance companies and 10 months premium is left, even the 10 months premium will not attract GST. So practically any payment you make will not have GST as we go forward. This thing is live and already happening. So if you're looking for a no GST insurance policy, you can actually buy it today itself.
Okay, just a clarification. Does this apply in the life insurance space to both traditional as well as ULIPs and term, or only term?
No, so this thing applies to every life insurance policy. So be it a traditional plan, be it a ULIP or a term insurance policy, this thing applies to every life insurance policy. The one thing that I will call out, and it's important, this thing applies to retail health and life insurance policies. At times there are these group policies as well. Let's say the ones that you typically buy from a bank, or from, there are other entities also which sell a group health insurance policy or a group life insurance policy. There GST will still apply because they're not individual policies. But any retail individual health or life insurance policies, it's pretty straightforward now.
Okay, let's get into some of the nitty-gritties here, because ultimately I think it's important to point out, Amit, that just because a rate reduction is set to happen doesn't mean that you should go out and buy. Ultimately, you should buy because you need it, and that necessity does not change at all. Therefore, even if the price was where it is right now, you should be going out and getting particularly health insurance. Life insurance, of course, depends on whether you have financial dependence. But what is a thumb rule to follow on health insurance? You spoke about your group covers, which a lot of people depend on, but beyond that, what in your opinion is an appropriate cover to have?
See, it depends on a few factors, Alex. It depends on where you live. It depends on how big is the family, etc. So, on an average, what we've seen is if you're in a tier 1 city, let's say, you live in Delhi, Bombay, Bangalore, Hyderabad, Pune kinds, in these cities, because healthcare is very, very expensive now and it's increasingly becoming more and more expensive, you should look to have at least 10 lakhs per person of coverage. Now, one can argue that, if I'm a family of 4, do I really need 40 lakhs coverage? The good news there is that the cost differential between a 10 lakhs coverage and a 40 lakhs or even a 1 crore coverage is actually very minimal. So the price difference between the two is about 20%. So it's not as if you're paying 4 times the premium. In fact, a very recently launched plan now offers unlimited sum insured. The cost of the unlimited cover is about 20% higher than 10 lakhs. So it's not very high in that sense, right? So I would say if you're looking to buy health insurance, you need not limit. You can buy a 1 crore cover or buy an unlimited cover, which is not very expensive at all. So that is the cover that I would say one should go for. If you live in a smaller, relatively smaller town or city where the cost of healthcare is not very high, I would still say have at least 10 lakhs cover, specifically if you're a family or if you're in the senior citizen category. That is the cover that you should look for. Never compromise on cover. There are other ways to manage the premium or reduce the premium. There is a very easy way. You can buy on EMIs instead of buying the entire premium upfront. The affordability significantly goes up. So paying 12,000 rupees in one shot may be difficult, but paying 1,000 rupees every month ends up being a lot simpler for a lot of people.
Yeah, and you can also have a base policy plus a super top up to reduce the cost, can't you?
Exactly. You could do that. There are ways of, now almost every company offers a fairly affordable super top up as well. You could even look to take a deductible in your health insurance policy. So typically for people, especially who have a corporate policy, you would have a 1 lakh, 2 lakh cover at least from your corporate. What you can do is you have that 2 lakh cover and take a deductible in your retail policy, so that the first 2 lakhs are paid from your corporate policy and everything henceforth is paid from your retail policy. If you do that, the cost of your health insurance significantly goes down by as much as 40-50%. So there again you can save money. So there are various means and methods of saving on your premium. One should never compromise on coverage, because that is something that's very penny wise, pound foolish in that sense. You may save a few thousands, but in the long run it will really hurt you.
Yeah, and on the term insurance part, and I'm talking about term insurance because we personally believe that if you're talking about life insurance, you must talk about term insurance and not money back policies or investment policies. You need to differentiate between the two. If you're going for the latter, then you need to know that you're going to a product which is both, right? I wanted to ask specifically on term insurance, therefore, what are the rules according to you that should help you determine whether you need it in the first place and how much you need?
See, so two ways one can look at term insurance. One is a very, very standard sort of recommended rule that basically says that you should take 10 times your current annual income. So let's say if somebody makes about 10 lakhs today in a year, then you should look to at least have a 1 crore cover, because you would assume a certain growth in your income, certain sort of upscaling in your life, in your expenses, and then based on that one can look at a 10x kind of a cover. That is one way. It's the old-fashioned way, I would say, of looking at it. However, I would also say that one should look at your aspirations in life. And when I say aspirations, I mean what aspirations do you have for the lifestyle you want to give to your family. And that changes because, right, what we're seeing is a lot of young people really progress in life. They buy a house, they want to send kids to the best school in the city and all of that, right? So one should always also look at what is the aspiration that you're looking at. And there, if you are a very aspirational person, then maybe 10x, maybe 2 less, and then you need to have a 20x coverage. So I think that is, and it's a very personal choice, I would say, because some people may be okay with 10x. Some people might think that, no, I want to give a certain lifestyle to my family, even if something happens to me, and then 20x might be the cover. That's one way. The other way one could look at it is, open up an Excel file and, put together what are the expenses that you foresee your family having if you're not there tomorrow. And where do you see those expenses 10 years down the line? Your kid may want to go to a nice college, maybe go outside the country, so you will need a lot of money for that. 10x won't solve for it today. So, and it's again a very personal choice. So one should always have that picture in mind as well. That do you want your kids to study abroad or, study at a fancy college in India?
Yeah.
Do you want them to continue having a good car, etc., etc.? All of those, it's a very personal decision, and one
100%.
can't have a...
Yeah, not necessarily. And so therefore, Amit, along with those expenses, you should also talk about maybe what you think your earning potential is going to be over a period of time and say, if that is not going to come to pass, how much do I want to put together to take care of my dependents? But Amit, thanks so much for taking the time and pleasure speaking with you. I think we've touched upon some important points.
Yeah, thank you, Alex.
All right, well, that brings us to the end of this edition of Your Money Matters. Thanks so much for tuning in, and do stay tuned. Lots more coming up on NDTV Profit.
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you, inviting social entrepreneurs to apply. Green Talk Social Impact Awards 2025, where innovation meets impact.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed.
Hello and welcome back to NDTV Profit. We're now in conversation with Mr. Shenu Agarwal. He's the Managing Director at CEO at Ashok Leyland, and he's also the Vice President at SIAM. Joining us from Delhi, the SIAM is holding its 65th annual convention. Mr. Agarwal, thanks so much for joining in, sir. It's always a pleasure to talk to you. My first question largely on what was discussed at the 65th annual general meeting. Now, we've seen at the annual convention that sustainability was a key focus this time. Talk to us a little bit about that.
See, I think the focus of the convention has truly been on sustainable mobility. That is one. And the other is that how India can take a leadership position on the world stage when it comes to automotive sector. So I think on both the fronts we have had very good conversations. It seems that the roadmap for both is getting more and more clearer as we continue to meet as an industry forum and we continue to converse with the government. I think that roadmap is becoming very, very clear. And that is the purpose of the SIAM or this convention, that we can have a visibility into how India can become a leader and also how India can swiftly move towards sustainable mobility.
The second question, Mr. Agarwal, largely, of what you said about sustainability, and let me take that point forward as well, because at Ashok Leyland also you recently announced a key partnership for securing technology to manufacture batteries which can be used for EVs for Ashok Leyland. Now this is of course spread over the few quarters, to say the least. So just talk to us a little bit about the rationale of this particular transaction as well as what that could mean for the future at Ashok Leyland.
Yeah, listen, when we talk about sustainable mobility, there are three important things in this. The first one is, how do we create very efficient alternate powertrains? So that is the one. And as you know, Ashok Leyland has been working on this for last 1 decade. And now we are very proud that we have a complete range of technology, starting from electric vehicles, which starts from the very low size of vehicles like light commercial vehicles, into buses for city, for intracity, and also for the medium and heavy duty trucks. Right, so on that path, we are making good progress. Even we are extending our technology now to possibilities of CNG, LNG, and hydrogen as well. Right, so that thing is pretty much in focus, and we have traveled quite a good distance there. Now, the second thing that we want to focus on as far as sustainable mobility is concerned is how we can create a resilient and a local supply chain, especially around the EV vehicle. And when it comes to EV, basically there are two parts to it. One is the battery itself, which constitutes about 40 to 50% of the cost of the overall vehicle, at least in the trucks and bus segment. And the other part is all the EV components. And both that we are importing from outside. So India does not at this moment have capability. But I think we have to start now, because we have done fairly good work on the powertrains. Now the second leg is how we can create a localized supply chain so that we can reduce our dependency on imports. And our recent announcement to get into the battery space, starting with battery packs, is one step towards that. So yeah, I think it should be a welcome move. I would say that even other players should get into this thing, because ultimately, sustainable mobility will only happen if we have a localized supply chain. The third part of this pillar is to create a circular economy, because especially when it comes to EV, there is a huge amount of possibility to create a very efficient ecosystem by focusing on circularity, right? So to that effect also, I would say Ashok Leyland has taken a few initial steps now by getting into the concept of RVSFs. So we are planning to open at least 3 RVSFs before the end of this fiscal year. And of course, next year we will focus even more on this.
The next question, Mr. Agarwal, you have mentioned that the partnership with CALB will largely come in Q1 of 2027. So there's still some time. But for both two-wheelers and four-wheelers, we have seen securing the supply chain has been one of the most paramount aspects of business for them. How does that differentiate essentially for trucks? Because we have seen that light commercial vehicles in the EV space have been doing well. How does that transition happen from light commercial vehicles to medium and heavy commercial vehicles in the EV space for Ashok Leyland as well as for the industry, according to you?
Yeah, see, it is true that, the adoption for light commercial vehicles and buses would happen first, and probably medium and heavy duty trucks would take a little bit more time. So basically it boils down to only one thing as far as our space is concerned, that can we reduce the TCO of the EV vehicles to make it, comparable with the TCO of a diesel vehicle. And a lot of work is going on towards that. The reason we are getting into the battery space is also because we want to lower the cost of the EV, right? And as I told you, battery itself costs about 40 to 50% of the overall vehicle cost, and therefore it is very important to lower that cost, to bring in innovation in that area, to make it more efficient, and that all we can do only if we get into that space and look.
Well, we've been joined by Mr. Shailesh Chandra. He is the president of SIAM and also the MD and CEO of Tata Motors EV and PV business. So many thanks being to NDTV Profit. You're hosting the 63rd annual convention of SIAM. Sustainability is one of the major talk points. So what is the path forward for India to on the sustainability?
If you would have seen in this SIAM convention, the focus is definitely on sustainability, but also on safety. And of course, localization. I think these are the 3 key aspects that is being extensively discussed. And I believe that it's a very aligned thinking as far as industry and government is concerned. You are seeing all kind of policy intervention, which are directed in this direction. Whether you talk in terms of incentivization, whether you talk in terms of regulations, and more importantly, this is all leading towards harmonization with what is needed to be globally competitive. So I think this is the center of all the discussion, and this is all going to make more innovative, globally competitive, and a part towards sustainable mobility for India.
Right. So in the morning session, Minister Gadkari mentioned that the industry must pass on the benefits of scrappage. And there have been various talks by companies that they will be passing on the full benefits of scrappage. But down the ground, when we see certain cases, it is not being passed on fully. So is there any diktat that you would pass on to the industry to ensure that scrappage is fully passed on?
No, I don't think so. There's any pass on of the benefit. It is about how much the industry participates in making the deal attractive for a customer, right? In terms of discount. So there is definitely a level of discount which is being given. Mr. Gadkari's point is not about how much that discount should be. It should be how you are able to attract more and more customers to scrap their old vehicle and go for a new vehicle. And there's a cycle that you have to go through. First, you have to really make people aware that there are supportive policies to scrap your vehicle, against which you get a COD, certificate of destruction, and basis that you can get the benefit from when you buy a new car against that. I think there is an awareness creation drive. There is, of course, greater push from the OEMs that is required, which he's been asking for. And this is very valid, and this is something which we have taken a note of. Internally, SIAM members are also discussing on this, how to promote this and accelerate this whole thing. If it requires, certain kind of discounts, etc., or beyond that, I think we'll be committed to do that.
Right.
So
Right. So the recent GST cut by the government, how do you look at that from an industry perspective? And if we talk about from from a truck OEM's perspective, how do you see benefiting the entire value chain of the India's automotive industry?
This is a massive transformation and reform that the government has brought, a much welcome step. Auto industry had been asking for quite some time, for I think 5-6 years or so, and it has come at the right time also, just ahead of the festive season. Of course, all the categories of automobile is going to be impacted slightly differently. You'll see slightly a lag response in commercial vehicle as compared to immediate response that you might see in two-wheeler or a passenger vehicle, because here a customer is ready to purchase in the festive period. The customers who were already in the market thinking of buying cars, now they see all of a sudden the cars have become cheap. With the same budget they can upgrade themselves. A lot of people who are not thinking of buying cars or two-wheelers, they feel that now it is within their budget, they will go for it, so additional demand is going to come. Net, what I'm seeing is that in the festive period there will be 3 factors which will boost the demand. Festive period itself has about 35 to 40% more demand as compared to average demand that you see every month. The second factor is the pent-up which has got built in the last 1 month. That will get released in the festive period. And third factor is, of course, as I said, that GST reduction will bring new buyers into the market. So there should be a short-term boost. In terms of long-term impact, we'll have to observe, how the overall ecosystem evolve, because it is also linked to how the overall GDP growth happens in the country and how the whole multiplier effect mechanism works, and therefore how much confidence it gives to the customers. But definitely, even without doing too much of analysis, you can imagine that the impact is going to be significant.
Right. So very lastly, from a Tata Motors perspective, how are you gearing up for the festive sales?
Tata Motors, no question.
Right. But how is the industry gearing up for the festive season?
So you can want to ask again.
Yes, yeah. Right. So from an OEM perspective and from the industry perspective, how is the industry preparing for the festive season?
Yeah, I think all the OEMs will have their own strategies, but one thing is very clear, that everybody is gearing for a huge demand. So now I think a lot of discussion was happening around stock.
Yeah.
I think that stock is going to come handy when the demand surge is going to come. So that should benefit the dealers, OEMs and the customers, because the cars and vehicles will be available at the dealership. But at the same time, there is this 10-15 day period of slowness of retail as well as offtake, because 22nd the GST regime changes, so you will avoid certain categories of cars to be shipped to the dealers because of the exposure on cess. So that you will see a different behavior. Rotation is under question, so dealers, possibly the wholesale will start after 22nd in a big way, but the real movement will start, say, after 22nd.
Right. So many thanks to NDTV Profit. It was a pleasure speaking to you. Many thanks.
Thank you.
Well, we have been joined by Mr. Hisashi Takeuchi. He is the MD and CEO of Maruti Suzuki India. So many thanks for speaking to NDTV Profit. The government has given a major relief in terms of GST. Now there are just 2 rates, 18% and 40%. From Maruti's perspective, how do you plan to pass it on to the end consumer?
Yeah, of course, we are passing all those GST benefit to the customers. And thanks for the government, this GST reduction, especially on the small cars, is a big reduction from 29 to 18, so 11% reduction. And when we calculate this back to the retail price, it's about 8.5% retail price going down. So we expect that we can start selling small cars very strongly. So this year, so far, the going rate of small cars is coming down. But now I think we can push it up almost over 10% from the current going rate.
Right. From quite some time, Mr. Bhargava, the chairman of the company, has talked about the demand for entry-level cars not being there. But, with the GST being reject, do you believe that there will be a sudden rebound in demand for small cars? And would Maruti also start refocusing on entry-level cars?
Yeah, one of the reasons why the small car sales is going down is because of the some safety and emission regulation is becoming almost par to the European level, which means the production cost went up. But thanks to this GST reduction, almost that amount of increase of safety and emission, the cost up is now coming down once again. So car is becoming more affordable for the entry level users. So I think entry car will revive once again.
Right. So we are just 2 weeks away from the festive season, and this has come in that point in time when we are seeing that many dealerships across the country, they are not accepting dispatches from OEMs, including Maruti. So how do you plan to address this issue, and how will you ensure that on 22nd of September all cars are there at the dealerships?
Yeah, actually we will be very busy because dealers they have some stock, but after 22nd of this month, I think many customers will come to the dealership, start buying car very strongly. So we will be very busy shipping out cars from us. Dealer will also very busy delivering cars from their premises.
Right.
So that will be a good time for us, for the dealers also.
Right. So, everyone waits for the festive season, especially for festivals like Diwali, to buy new cars. So, will there be any more discounts apart from the GST cut? Will there be any over and above discounts that the company would offer?
Now, first of all, this GST discount is a massive price change. So I think that itself already a very good reason for the customer to come and check the price. Our like a promotion, they can check at the dealership when they come.
Right. So very lastly, that you have already unveiled your electric car. When can we expect the electric car to get launched in India?
Yep. Our production is ramping up gradually. So first, in a few months, the production is limited. But the demand is very, very strong from Europe, where the demand of EV is very high, and the dealers are waiting for a long time, the arrival of EV from India. So our priority is given to a European market. So first batch went to UK, followed by the cars to continent. And then soon after that, we will start shipping cars to Japan also. Then we will also introduce the car to Indian market. So it will be after Diwali season.
Right, so many thanks for speaking to NDTV Profit. It was a pleasure speaking to you, and all the best for the upcoming festive season.
Thank you.
Well, we've been joined by Mr. Nalakant Golagonda. He's the CEO of Mahindra & Mahindra's automotive division. So many thanks for speaking to NDTV Profit.
Pleasure to be here.
It will be like a double Diwali bonanza for the customers. But from a company's point of view, how do you look at the GST rate cuts? And you were the first ones to pass it on to the consumers. So how do you look at the entire GST cut for your company?
Yeah, so GST 2.0, as we are calling it for us, it's actually a benefit that the government has aimed for the customers to improve consumption. That should benefit all the different industries. Auto is definitely one of them. If you take our portfolio, about 60% of portfolio are the larger vehicles, where we traditionally have paid a GST around 48% to 50%. And that comes down to 40%, the significant benefit for the customers there. The rest of the portfolio, which is about 40%, there the benefit is anywhere from 12 to 13% or 11 to 13% if you look at it. You go from 31, 28% down to 18%. So there's a benefit there as well across the board. So, and it's substantive. You're looking at anywhere between, at the highest level, at 1.57 lakhs of benefit on some of the vehicles, 1.45 on 700. So we believe that it will be exciting for the customers, and wherever there's consumption and growth happening, it's good for the company as well. So we really welcome it.
Right. So how do you plan to meet the pent-up demand as well as a festive demand? And this has come in that point in time when, from a dealership perspective, there are many dealers across the country that are not accepting dispatches from OEMs. So within these scheme of things, how do you plan to tackle out this issue?
Yeah, so we have taken a fairly prudent approach in terms of dispatches, even in our August numbers. So we actually, when you see the press release we put out end of August, we said that we're getting a cautious approach on the larger vehicles because the visibility around cess wasn't there at that point in time, and we still something we are working with the government to see where we are. So we have ensured that the dealers are not burdened with additional stock. And the scheme that you talked about, that we have actually put out a scheme from 6th September where the customer doesn't have to wait to get the GST benefit. The exact same of benefit the customer gets from 22nd September, same quantum of benefit we are giving through schemes from 6th September. And that's created enough excitement to the market in terms of walk-ins, in terms of inquiries. And we are hoping that will help clear out some of the inventories for the dealers and reduce the stress they have.
Right. But don't you feel that it might be a logistical challenge for OEMs like Mahindra & Mahindra, considering that you'll have to supply so many new cars to dealerships? How would you manage that?
Yeah, so those are some of the areas we're working on at this point in time. Like I said, that it's just been a couple of weeks since this has come out, and we are confident that we'll find some ways to solve for that. And again, that's something the company is focused on.
Right. And how much, more growth are you expecting after this GST rate cut? How will it affect the book of the company?
Yeah, so if you saw our projections we put out at the beginning of the year, we are already put on an aggressive number, which is mid to high teens growth. In the backdrop of what the industry would have been 2 to 3% growth, there is fairly aggressive numbers we have taken. So in our view, the GST benefit should help us achieve that number. Beyond that, it's too early for us to say whether we're going to get additional numbers at this point in time, but we are confident that the mid to high teens volume growth we had projected, we'll be able to.
How are you preparing for the upcoming festive season, and as far as the pent-up demand is concerned, how will you meet it?
Danish, at the outset, I'd like to thank the Honorable Prime Minister for really ushering in the GST 2.0 reforms at such a right time. You mentioned about the festive season. I think he could not have chosen a better time for this. At Hyundai, if you see, we are very excited because for us, the new plant in Pune is also coming in. We believe that already we were doing very well in exports. April to August, export growth has been 12.5% for us and consistently going up. And now that with the GST cut and the affordability going up, we will see a positive momentum coming in the domestic market as well. So all in all, we're very excited. Already last few days since the cut was announced, we were the first company to pass on the full benefits to the customers of the GST cut. We gave the new price list to our dealers and of course to our customers as well. And we are seeing a good uptake already coming in. And come 22nd September, I think we are really bracing up for a huge opportunity.
Right. So besides this, rate cut is one thing, and on the other end, we are seeing that there is a lot of cars that are parked at the dealerships right now, and also in your stockyard. Considering that there will be no fresh car sales from dealerships to OEMs, how are you handling this issue at the moment?
Look, I'll be very honest. I think before the festive season, every time there's a preparation and the stock levels are good because customers want delivery in festive season. So what we are doing is we are using this opportunity to book the cars. So we're telling the customer that they can book now and they can book at the new prices, which include a GST cut. Additionally, there are some very exciting offers for the customers as well. So they can book now and then take the deliveries starting from 22nd September. So I think this will really help us to tide over this stock situation. And I would say this is an opportunity because yes, last few months, 4-5 months were not very good. Right. So probably the stock looked high. But now with this cut coming in, I think that there's going to be a huge demand. And let me tell you, in fact, I am expecting that maybe we will fall short of these stocks because there will be so much of demand from the customers.
Right. So considering that it is a major cut as far as taxes are concerned, do you feel that probably the rural market will outshine the urban market?
So if you see, Danish, last few years, in fact, rural markets were the growth engine. For Hyundai also, the rural penetration moved up from 19% to 23% in terms of our contribution to total sales. Now I feel with the GST cut, even urban markets will join the party because the sentiment in the urban markets, because of the geopolitical situation and all those wars going on, and of course because the supply chain, everything was disturbed. But now I think this is a good impetus. The other thing which will come in is because now customers will be really be able to upgrade because the money which they can spend remains the same, but in the same money they can get a higher end car. So I think this will be a big change which will happen. So at the bottom end of the spectrum, the car penetration is about 34 per thousand, which will go up. But more importantly, in the less than 10 lakh rupees segment, I think the SUVs could see a very big jump. Okay. And I am myself expecting that segment will see probably the maximum growth, of course followed by the other two segments which are more than 10 lakh rupees SUV and of course the entry level as well.
Right. So would there be more discounts on the festive season this time?
So like I mentioned already, in addition to the passing of the entire GST benefits, we have announced very, very good offers, and they are all over the place. We are doing a good marketing so that they can reach the customers both in the urban and the rural areas. Of course, held by our new brand ambassador Pankaj Tripathi ji, who has a very good mass appeal as well. So I think offers are very good, and this is the best time for the customers to come to a Hyundai showroom and buy the cars.
Right. So very lastly, as far as the entire market share is concerned and positioning of Hyundai is concerned, you were the number 2 player in the list, but somehow other Indian companies like Tata and Mahindra are giving a tough competition. So where do you look at Hyundai in the coming few years to come, and when can we expect you to either bounce back to the number 2 list or become market leaders?
So I think this is, we hold this position very, very passionately. Last 29 years we have been in India, and we have really taken the market very holistically, both in the domestic as well as in the export market. With the new capacity coming in, our new model cycle will also come in, Danish. So 26 new models, including upgrades in the next 5 years. And in the Q3 of financial 26, the Pune plant also comes in. So I think a very good marriage is going to happen, which will give us a great impetus both in the domestic and the exports market. And with the IPO, I think we have become now a truly Indian company, and we are very, very excited that this GST cut, with the increased capacity and the new model cycle coming in, I think we will be on a very good trajectory of growth.
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you, inviting social entrepreneurs to apply. Green Talk Social Impact Awards 2025, where innovation meets impact.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell, or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide, and invest by
Good evening and welcome. This is NDTV Profit and I'm Vikram Oza. Now, wherever you look, protein seems to be the buzzword in every fitness advertisement today. But here's the reality that we see, because there are surveys showing that nearly 70 to 80% of Indians do not get enough protein in their daily diet. In fact, the Indian Council of Medical Research, the ICMR, recommends that there should be 50 to 60 grams of protein daily for an average adult. So into this gap steps in ITC, announcing this new product in the market, which is called Ashirvad High Protein Atta, which it claims can give you 25% of your daily protein need in just not one, not two, 3 rotis. So in 3 rotis, you get 13 to 15 grams. Now that's quite a marketing pitch. So is this part of a genuine health revolution, or is it a clever FMCG marketing story? Because make no mistake, this is big business. Nestle, Britannia, Tata Consumer, everyone wants a nice juicy bite of the healthier staples market. Now the question is, will a protein-packed atta priced at a premium really find mass adoption? Or is it destined to stay an urban elite play? So this evening on The Big Question, we are cutting through the hype and asking, high protein atta, health revolution or smart marketing? And to break this down, we've got a stellar panel tonight. Vibha Harish is co-founder of Cosmix. She runs her own plant-based protein company, so in a good position to tell us how health-conscious Indian consumers are really thinking now. Manish Bhatt is with us. He's founder-director of Scarecrow MNC Saatchi, and he's going to decode the brand and marketing angle. We also have Nicole Linhairis-Kedia. Now, she's a sports nutritionist. She has been an integrated health coach as well, and she's going to give us that science check on this protein intake that we are talking about tonight. And Praveen Govindu is partner at Deloitte South Asia. He's going to help us crunch the business side of this debate. So glad you could join us, ladies and gentlemen. Let's roll out the dough on this big question. Nicole, let's start with the science. Tell us, does India truly have a protein crisis, or is this more of a marketing narrative that we are seeing?
Hi, Vikram. No, it is quite true. India does have a protein crisis and has been having one for a while now. It's honestly great to see India's shift towards being health conscious and, making all the attempts to finally understand the importance of having a balanced plate and making sure protein is not an option and is something that needs to be present in every meal plate that we have every day. If you ask me, that it's not something that's
can't take it lightly.
To take it lightly, it is definitely something that we need to pay more focus on, and we're doing great in that space.
You think we're doing great in that space? Vibha, as an entrepreneur in the protein universe, you track consumer health trends very closely, I'm sure. Does protein resonate with the average Indian family, or is this mostly an urban wellness buzzword according to you?
I think we basically started protein as a product 3 years ago. And I would still say that at the time, it was definitely for a smaller audience. And we didn't see that adoption at that time. We didn't expect it either. But if I were to be honest, I think, and, just like Nicole was saying, I think it was meant to have its spotlight because I think it had been greatly ignored for such a long time. And I think at the moment we see people of all kinds coming in and trying protein and understanding its importance, getting aware, getting educated. And so I think it's definitely moving in the right direction. It's definitely moving towards all sorts of people, different kinds.
When you say different kinds, what do you mean? Demographically, what are we talking about?
Different economic backgrounds. We see a huge tier 2, tier 3 adoption for the product. Not only ours, overall, in all different marketplaces we're a part of. This is the common statistic that we hear that, protein is now being widely adopted across the country. We see government getting involved in that. So a couple of years back, we couldn't have imagined this. And here it is.
All right, so here it is. Praveen, you tell us in business terms, what does it really mean for this market? We're talking about a 2 lakh crore rupee staples market in India. Do you think this is going to drive adoption like maybe in a way low sugar did, like high fiber did? Or do you think it's going to remain a niche premium play?
Thanks, Vikram. No, I think it will become mainstream. In fact, if I were to quote one or two structural indicators for you, over a period of 10 to 15 years, right? There is a clear shift, and this is all coming from surveys that have been done, household surveys that have been done. The percentage of wallet share of cereals has almost come down from 40%. It used to be 40% around in 2000, right? And in the last couple of years, this has come down to 14%, right? And the percentage of protein food has actually increased, from almost 5% to 10%. So there's a double 2x growth in protein food, while almost 66% degrowth in cereals. And of course, there's also one more category which also grew in during this time, which is also packaged foods, right? And that also has actually increased from 9% to almost 23%. So long range, if you see, clearly there's a structural shift happening. Consumers are, looking at protein in a big way, and I think this shift is here to stay.
But surely, Praveen, when you talk about greater penetration for protein in the markets, in the Indian market in particular, there would be certain barriers. Could it be the pricing? Because at 80 to 86 rupees a kilogram that this atta is going to sell for, how big a role is pricing going to play in the pickup of protein in our diets in times to come?
Yeah, see, in fact, at Deloitte, we ourselves have done a survey of consumers, right? Yes. One of the things we also asked was, are you willing to pay a premium for protein-based or healthier options, right? And almost 80% of the cohort answered yes, they're okay to pay a premium if that's a healthy option, right? So essentially, it clearly demonstrates that wherever there is a spending power, there is clearly a demonstration of the intent to be able to pay a little bit premium, even if that means paying a higher cost, right? So that I think seems to be the case, and this is across urban and rural areas, right? And you'll be surprised that most today, for example, doctors, after a certain age category, attribute a lot of issues today to probably imbalance in protein intake. And then, they're also educating the consumer that you need to increase protein intake, right? So across 360 degree, across all stakeholders are looking at improving, consumers.
So yes, of course, as far as branding goes, and Manish, do weigh in over here, because there is always a possibility that sometimes you get so taken in by the kind of trends that play out as well. I'm wondering whether protein as such is part of a trend. Does protein atta, for one, sound like the next multigrain fad, or do you think ITC genuinely is here to own this space?
I think any trend as a novelty definitely will do a good job. There was a cholesterol issue, and there was a Mufa, Pufa, and all those things. And that time, I think rice bran. I think the normal native oil users switched to a lot of new type of edible oil usage was introduced to a lot of Indian pockets and social pocket, economic pockets, and geographical pockets. And I think that did change. The cereals, the cornflakes was introduced, and that also changed. So I think behavioral change do happen with the right marketing efforts, but the health scare versus health benefit, like a problem solver solution versus the enhancer. I think enhancer is a slow burn thing. People would need a lot of communication to be done to really convince them to convert into the habit. So I think protein, because of the introduction in gym and all, it's like how a lot of health drink. Protein does have a typecast of a little too do good sort of a persona.
Yes.
So I think it has to come as either a cooler or meaningful, either of that.
Right. So the need for it is firmly established. When you're talking about 70 to 80% Indians are protein deficient, then the need is established. But as far as positioning goes, is it smart, Manish, taking a staple like atta and making it, well, in a sense, aspirational, right? Because still protein would be thought of as aspirational, though, of course, the effort is to make it more mass.
So I thought the data of protein deficiency, how does the geographically it kind of bifurcated, will have a lot of meaningful analysis needed, because if protein deficiency is more towards the less premium market or a more mass market, then probably high priced brand or that is not going to kind of cut ice. But if it's a phenomena of the such premium urban market, then probably yes, it is like a right demand for a right supply. Basically.
So let me take that across to Praveen. Praveen, you see this as an attempt to kind of make it more mass than it has been in the past, because when you're talking about atta, it's about mass consumption. But when you talk about protein-rich atta, then what do you address? What is the kind of audience that you are addressing over here that needs addressing so that they are in an ability for that kind of pricing as well to purchase this kind of product in the market?
So I agree. See, I think brands will have to make it mainstream. Of course, initially there is anyway a lot of under penetration of even protein-rich diets today, right? So while these products, I'm sure there are almost every brand is now looking at how do we fortify their specific product or category with protein. But of course, to start with, they will have to, this would probably require a little more, there's a higher price to this particular SKU or this variant compared to the non-protein variant. But then, they will, most probably start off with tier 1 markets, upper income categories. And once that is done, I'm sure it will also kind of percolate down because protein deficiency is not an urban phenomenon only, right?
That's true.
It is across the country.
Yes.
So,
so then the positioning might have to change. It may not be marketed the same way. Yes.
Yeah.
Nicole, but tell me, 3 rotis. This is how the positioning is happening. 3 rotis serving 25% of an average adult's protein needs. Scientifically, is that claim valid, or does it oversimplify nutrition today?
No, I wouldn't say it's not. It's not valid. It is valid. I do feel CG is making a big attempt when it comes to fortifying greens, and it is also helping us meet our protein requirement. It's also filling up gaps in terms of vitamins and minerals that our body needs. But there's a very fine line when they start doing that versus when they're health washing. When you sell protein water at 8 grams protein, but you don't state facts that are also there in the label, where there's high amounts of sugar, there's high amounts of sodiums that all get packed together. So that's why I said there's a very thin line between what FMCG is doing versus what is actually given to the consumer at the end of it. So some of it is great, fortified atta, staples, it's great. It's also affordable in comparison. But when you compare protein water to, say, just regular milk, which is way more, cost effective, giving you the same amount of protein, giving you giving you calcium along with it. I mean, I would definitely choose that option over something that's packaged and just sold to us as protein water.
Right. So, I mean, more at the consumer level, and you need to have some sense, some knowledge to be able to understand which of these products really get you the health benefits that real protein actually affords. But Vibha, when you talk about startups and you talk about D2C health brands, how they're positioning themselves against these big FMCG claims, will the consumer trust an ITC more? Perhaps because of its size, the size of the company, or perhaps less because maybe to some it sounds like marketing. Vibha? Vibha, you're on mute. Yeah.
So I think a bit of both. And I think both, at the end of the day, both exist because there's different types of consumers. And I think in a way, this was a thought, for a lot of younger startups when, the bigger players started to come into the market. It was, hey, okay, this is validation of some sort because we know that this category is important. It's a category we're solving in, that there is a genuine need to problem solve in. But at the same time, I think there is, of course, the challenge, right? Of, okay, it is at the end of the day competition. So there's a bit of both. But I think at the end of the day, there is the bigger players still have, they're not as agile, whereas I think these younger startups were able to innovate at a much faster pace. And so I think, there is definitely that role to play for.
I think your pet needs his feed for the day. Perhaps you must quickly attend to that need. But meanwhile, let me talk about the different factors, because there are several factors affecting buying decisions of health products. Adulteration is one, misleading health claims another. Now it's important to tackle these in businesses as well. So I don't know, Vibha, if you can answer that for me right away. Do you think you can? 2 minutes. All right, fair enough. We'll come back to that. But to be able to manage all of these, as far as the kind of misleading health claims sometimes that have taken place, Praveen, in the industry, how has the industry dealt with it? We've seen certain large instances in the past as well, and then there is an entire PR exercise that has to roll to be able to bring back the trust that consumers have. So when it comes to specific health products like this, it becomes that much more important to deliver on the kind of claims that a product is putting out there.
Absolutely right, Vikram. I think that's the highest priority. Again, I'll just quote one of our Deloitte surveys. Almost close to 75% of the people have clearly said we prioritize reading the ingredient list, right? So it's very important that whatever is the ingredient, the company kind of shares that in a very transparent manner, because everybody, almost 73%, it's not a small number, right? If we've asked this question to 1,000 people, 700 people have said they are actually reading through the ingredient list. So somewhere it is absolutely critical to be very genuine with what is going into the packet, and to be very transparent with the consumer. And yes, if there are some challenges that companies have faced in the past, they of course have to mitigate and address some of those. But this is absolute priority from a consumer standpoint. And hence, how do you ensure that it's not just the packaging, right? The entire storytelling, the articulation, all the touch points that the consumer has with the brand, whether it is their online, offline stores, wherever else they're available, every touch point has to communicate the same transparency and share, the same, ingredients in a very genuine manner.
Right. And Nicole, I was just wondering, because when you talk about wellness today, and you talk about Indians who are very conscious about wellness today, they're moving towards several products like oats and quinoa and almond flour. So I'm just wondering where protein atta fits into that mix. How much does that appeal to the wellness conscious Indian today?
See, Vikram, as we just spoke, India. I mean, honestly, for someone who can't afford, like quinoa and all, is not cheap. It's not going to be affordable by half of India, at this point, because it's not priced like that yet. So, if you ask me if I'm getting an atta that's fortified with protein, would I choose that at a slightly higher price? I think as Mr. Praveen stated that they are willing to pay that price. They are willing to pay a slightly higher price if they're getting something with it. So what happens is when big companies like this come up with this, at least they're educating the mass about the importance of protein, and that really helps. It starts the conversation at least. So is protein?
Is it also, Nicole? Do you think we have a term in the world of luxury which is bridge to luxury. So I'm just wondering whether a protein atta is more a bridge for middle India when you talk about healthier food options out there.
Absolutely, it is. That's why I said like fortified attas is something that's come to India fairly new right now. But it's great because, as I said, they fortified with a lot of more minerals and like calcium, iron, and half of India is deficient in a lot of these things.
Correct.
So if you ask me, it is, if I'm getting that at a slightly higher price, today that's what India really needs. And say a quinoa and say an almond flour is still for a very niche market for us to, really compare it to what a high protein atta is doing at this point.
But one wonders if that's going to be the next beeline as far as companies are concerned, because they see the attractiveness and certain trends that are formed in that population of urban India then becomes mass as time moves along and certain things move along really fast. Manish, you see that happening? Because as far as consumers are concerned, there are trends to follow and certain trends are just good trends to follow. So do you see this becoming more mass? When you're talking about protein atta today, the list of products could become longer soon, and that way brands will be looking at elongating the kind of offerings that they have for consumers who are health conscious.
Yeah, I think these offerings definitely attract to trials. E-com makes it easy, and people do get attracted by this new offerings and new enhanced product. But at the end, in urban scenario, the younger generation, as they look at the ingredients, they also look at the very important ingredient called price. They are price conscious as well. So if it's a behavioral change, I think it has to be well priced, not come across as an indulgent. I think ease and convenience sells the best. So it has to be convenient for your wallet, and it shouldn't take the entire benefit which we trying to give, and but it shouldn't be still become a lifestyle offering. As far as that is concerned, I think it should work.
But the competition landscape is going to get that much more busy now, Vibha. Tell us how startups like yours, D2C health brands, how are you looking at the competitive landscape when you see these big FMCG claims being made for the kind of new products they're putting out? I was just asking you whether they are going to trust an ITC more because of the size, because of the marketing scale that they'd launch for a product of this kind.
Yeah. I think the protein revolution, if I might say so, started off, I would say, with a lot of the new age brands and comes with a lot more testing, certifications. And while I would say, your bigger players definitely have their name, which is just what they're building on over the years, I think while they've definitely got the distribution, the wider penetration, I think at the end of the day, the younger brands still have education, they have community, they have, and I know these are like underrated, but social media. I think a lot of the younger brands are able to talk to the customer, talk to them about how they're building out this product, what is safe, what is clean. And, in a world where we've now found that so many protein brands have done amino acid spiking or are not third-party testing.
Right.
So how do you build up that trust? I would still say a lot of new age brands are able to do that, direct, and that's direct to customer, right? So we're able to really talk to the customer, understand what they need, but ensure the bigger players are able to do just a lot more widespread distribution. And so I think at the end of the day, we're also talking to two probably different types of customers, of course with an overlap, but there are two different types of customers. One probably looking for I want the highest quality protein,
yes,
and one saying I want to make sure that, like you said, I'm bridging the gap, and I'm
correct.
Probably
so
becoming
very quickly, Nicole, I want to ask you before I wrap this up, if you had to choose multigrain, gluten-free or high protein, what would win today's consumer?
High protein.
High protein, you think?
High protein, yeah. At this point, and it's great because I also see that India, who used to always focus on cure, is now focusing a lot on prevention. So it's great to see that, we have more education about how
exactly
protein is not an option. You know what I mean?
Correct.
So I would definitely say at this point, protein.
And Praveen, very quickly, will protein atta reach kirana shelves in small towns, you think, or do you think it's going to stay a supermarket trend?
No, it would definitely reach the kiranas. If I'm not wrong, already some of these kiranas must be selling a lot of protein fortified food, because the demand is very, very clear, right? Like I said, there are people, doctors today, if you go and say, there is a pain in your back, or there's a leg pain, they attribute it very clearly and say, you have protein deficiency, you please have to increase your protein intake, right? And this will actually reduce your healthcare costs.
Sure.
So there is actually, consumers also will look at it like, okay, can I reduce my healthcare cost, instead have protein fortified.
Absolutely.
Food,
so
right?
there
So
you
that's
have it. I mean, there's no taking away from the fact that protein may be that missing nutrient in India's diet, but whether your humble roti can solve that gap is still up for debate. ITC, of course, may have fired the first shot in this protein war, if it is going to be that. But the big questions, of course, still is about science versus marketing, premium versus mass, urban trend versus true adoption. My thanks to my panel, Vibha, Harish, Manish Bhatt, Shreya Shah, Praveen Govindu. Thank you indeed, Nicole Kedia, for joining us, helping us chew on the facts. And the battle for India's plate just about heating up. Tonight, it looks like protein is the new buzzword. But that's it from us on The Big Question. I'm Vikram Oza. Thank you for joining us on NDTV Profit. The action continues.
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you, inviting social entrepreneurs to apply. Green Talk Social Impact Awards 2025, where innovation meets impact.
Presenting the all-knowing, all-powerful Tech Guru.
Good afternoon, you're watching Market Express. I'm Sanjana. Let's start. Markets trade in a range through the day. Ends near day's high. The Nifty ends the day above 25,000. Gains for the 7th day in a row. Adani and Shriram Finance emerge as top Nifty gainers. Sensex ends flat with a positive bias on weekly expiry day. Meanwhile, broader markets underperform benchmarks. Nifty mid-cap 150 and small-cap 250 end flat. Nifty oil and gas emerge as top sectoral gainers led by Gujarat State Petronet and GAIL. All sectors end in the green except IT and auto. The rupee settles at a record closing low against the US dollar, closes 34 paise lower versus the US dollar. Tega Industries stock pairs opening gains. This was on the back of news that Tega Industries has acquired Molycup for 13,000 crore. Tega will hold a 77% stake in a new special purpose vehicle, with Apollo Funds owning the remaining 23%. The deal is funded through $361 million from Tega, including debt and equity, plus Molycup's internal accruals. But the Lal Street was concerned that promoter stake in Tega drops to 64% from 74.8%. Molycup's lower EBITDA margins of 11.2% compared to Tega's 23.5% raised doubts. Tega aims to reduce Molycup's debt and boost margins to 14 to 15% in 3 years. The Shipping Corporation of India surged over 5% in trade today. The company has acquired a second-hand VLGC, a very large gas carrier named Shivalik. The ship has over 54,000 metric tons of deadweight tonnage and over 47,000 gross tonnage. VLGCs are designed to transport large amounts of liquefied gases. This acquisition boosts the company's gas transport capacity. The Ministry of Environment has introduced a new rule to fast-track environmental clearances for rare earth elements mining. Public consultations are exempted, but projects need Central Expert Committee approval. Companies must submit detailed environment management plans. The rule aims to accelerate mining of critical, strategic and atomic minerals. This could benefit companies like GMDC, NMDC, Hindustan Copper and Hind Zinc. Aurobindo Pharma stock rose after it exits the race to acquire Zentiva. The stock had dropped 5% on 20th August amid acquisition rumors. Aurobindo was a front-runner to buy the generic drug maker for 5 to 5.5 billion. Concerns over geopolitical risks and balance sheet strain fade with the deal's collapse. Adani Power secures an additional 800 megawatt project from the Madhya Pradesh Power Management Company. This boosts its total awarded capacity to 1600 megawatts under Green Shoe option. The 21,000 crore project will supply power at 5.838 per kilowatt. It marks Adani's fifth major power order in the last 12 months. The company aims to reach 41.87 gigawatts capacity by 2031 to 32. Dr. Reddy's Laboratories acquires the Sturgeon portfolio from Janssen Pharmaceutical for 50.5 million. The deal spans 18 markets including India and Vietnam. It bolsters Dr. Reddy's central nervous system portfolio. The acquisition marks the company's entry into the anti-vertigo segment. And Japan will approve a new cholesterol-lowering drug, Nextolol, made by Esperion Therapeutics. It uses an API from Newland Labs. The drug targets bad cholesterol and has cleared a key regulatory hurdle. Newland is a vital partner in its commercial production. Citi remains bullish on OMC stocks despite market concerns. HPCL, BPCL and IOCL show strong earnings and government support. Fears of Russian crude import issues and fuel price cuts weigh on sentiment. Recent price drops offer a good buying opportunity. Jefferies maintains buy rating on Adani Ports. They set target price at 1,815. The management guides for 1 billion tons cargo by 2030. This leads domestic ports and international expansion. The company focuses on EBITDA growth over volume alone. Margins expand alongside integrated logistics. Leadership eyes 14 to 19% year-on-year EBITDA rise in FY26. They expect 12 to 14% volume growth too. US tariffs show limited hit on port volumes and capital allocation stays sharp. Macquarie flags unrest impact on Nepal and Indonesia. Nepal makes up 8% of Dabur's sales and 14% of their FY25 sales. Asian Paints, Kansai Nerolac and Hindustan Unilever each expose about 1% of FY25 sales. For Berger Paints, this number is estimated at 2% of the overall sales. Jupiter Wagons bags a 113 crore order from the Ministry of Railways. The company will supply 9,000 LHB axles. Its total order book now stands at 5,972 crore as of June 2025. Apollo Microsystems signs a pact with US-based Dynamic Engineering. Its subsidiary Apollo Strategic will handle tech transfer and license production of rocket motors. The move aims to indigenize propulsion tech for multi-barrel rocket systems. HSBC turns bullish on NTPC, upgrading it to buy and raising the target to 400. The company leads in power generation with new bets on battery and nuclear tech. With capex plans underway, HSBC sees a strong long-term earnings growth. SEBI's interim order on Sprite Agro's suspicious trading activities faces regulatory hurdles as the company plans a bonus issue and a dividend. This is likely to cost the investors unaware of the regulatory risk around the company. On to an NDTV Profit exclusive. Despite a steep GST hike on carbonated drinks to 40%, Coca-Cola plans no change in retail prices. Industry sources say Hindustan Coca-Cola will hold MRP across its beverage range. Fruit juices remain under the 12% slab and Kinley water may see a price cut soon. Amazon now has rolled out its 10-minute delivery service in Mumbai following strong growth in Bengaluru and Delhi. The ultra-fast service lets users order daily essentials, groceries, personal care, electronics and more for near-instant delivery. To support this, Amazon has set up over 100 micro-fulfillment centers across the 3 cities. With customer demand rising 25% month-on-month, the company plans a nationwide expansion by the year end. Health insurance premiums become lighter on the pocket from September 22nd.